Hello, everyone. You're warmly welcome to this insightful panel discussion put together by Forex Trading in Ghana, also known as FCGFX. My name is Ikia Budu, and I'm going to be your host for today. Now, as most of you already know, Forex Trading in Ghana is very intentional when it comes to educating traders in its community, and this happens to be one of our very insightful discussions. And I hope at the end of this discussion, you guys would walk away with very, change of mindset and a sense of understanding when it comes to forex trading, especially for beginners. Okay. And this webinar titled "Why Forex New Forex Traders Lose Money." We'll be focusing on three main pillars. That is trading strategies, trading psychology, and then trading risk management. I know most newbies can totally relate to this topic. And if you didn't have the right education at the beginning, but not to worry, that is why we are here. And we are going to make sure that you guys get the understanding from the basics so that your trading journey from now on is going to be a success. You're going to make, more profits consistently. Okay. Yeah. And yeah, we are honored to have um, key players in our midst. Okay, we have globally recognized forest industry players, and we have here speakers for today. We have Rutherford Orlean Banks, also known as Investor Maybach. I know most of you guys have seen or heard about Investor Maybach. He is a $12 million account manager and has won so many awards globally. And he is here with us, who's going to talk about trading strategies. Okay. We also have Mr. Robert G. Van Eyden, the CEO of Scopes Markets based in South Africa. He is here and he'll be talking to us on trading risk management. Last but not the least, we have Mr. Nordine Mejd, the director of TradingCult, who would take us through trading psychology. So I know that by the end of this discussion, you guys would walk away with a very new mindset and an awakened an awakening spirit when it comes to forex trading in Ghana. So before we even get into this whole presentation, there is this special guest that I'd like to introduce to you guys. He is in the person of Mr. Andy Akorli. He is a CEO and then the founder of Paradigm Forex Academy, and he will be taking us through the available job opportunities when it comes to forex trade. I know most of us are mostly into the buying and selling bit of forex trading, but aside that, there are also various um, job opportunities that we can look into, and he's going to throw more light on such areas. So, Mr. Akorli, can you hear me, Mr. Akorli? No, not yet. Hello, Mr. Akorli, can you hear me?
Can't hear you. Can you hear me now?
Yes, please, I can.
Okay,
So,
that's nice. How
yeah,
are you doing here?
I'm doing well, Mr. Akorli. How are you doing too?
I'm doing good. It's been a while.
Yes, I know, right? I hope,
I
yeah,
see.
okay. All right.
Okay,
So,
so thank you guys for having me. I would like to start with where forex traders can find themselves. Okay, it's not only about buying and selling, as you said.
mhm,
Most people think forex trading is just only about buying and selling. But I think it's more than that. Apart from we being the retail forex traders, where else can we find ourselves? Okay, so there are lots of places we can find ourselves as foreign exchange traders. Once you are just trading for yourself, what again in the industry can you be to make something out of? You understand?
yeah,
Yeah. So I will start with some people we call hedge fund managers. You can be with the
okay,
institutions called hedge fund companies. You
okay.
understand? These people are also different forms of, they do different complications of trading. You understand? So that is another area we can look at. Not just only trading for ourselves, but
Yeah,
trying to
excuse
get
me,
into
Mr.
the
Andy.
institutions.
Henry Darkon, can you
Yeah.
please turn off your camera?
What do you say?
Mr. Henry Darkon, can you hear me? Please turn off your camera. Kindly continue, Mr. Akorli.
Okay, so different institutions we can find ourselves is the brokerage, the first brokerage, hedge funds, institutional investors like the investment banks, the multinational banks, corporations, investment managers firm, and then the central bank. So it's all not only about just you buying and selling. These are the places you can go and find job opportunities for yourself. How can this be possible? You have to really be trained. You have to train yourself, educate yourself. Have a mentor who can train you and guide you through all this. You can't just wake up one day and say you're doing foreign exchange trading. You're going to lose a whole lot of money in the business. I have been in this business for a very long time, from late 2013, and then in fact I know the in and out of this business. Starting alone on my own wasn't easy for me. I lost a lot of money. I mean, I wasn't so focused. I could make $1,000 today, lose 2,000 tomorrow. I could make 5,000 today, lose 3,000 tomorrow. There was no consistency. You understand? So what? After I got the education, I trained myself. I'm like, no, okay, then there has been a difference. So what was the problem? The problem was all about education. There was no education. There was no training. There was no somebody. There was no one to mentor me. You understand? So in fact, things have been designed now to help people who are coming into the business. You understand? So in fact, a whole lot of opportunities are in the forex business. Okay. So having mentioned the places we can find ourselves. Under these things, what qualifications, okay, can you have so you can be able to work under these firms? So one, I would say working for yourself as a forex trader, you don't really have to get any qualifications, okay? You just have to practice. You just have to practice and then get the understanding. You understand? Get the understanding. Educate yourself on the forex market, and then for that, I think you are good to go. You understand? Yeah. Is there any question before I proceed to the
So,
next?
Mr. Akorli, if I understand you correctly, what you're trying to say is that when it comes to forex trading, you don't necessarily need any special qualification. Once you're able to read, write, and have access to a smart device and internet and get a good, education, you can be
Yes.
able to trade forex.
Yes.
Is that what you're
Yes.
trying to say? Okay.
Yes. And then one thing, constant practice. After the education,
Okay.
what's next? And then
Okay.
the constant practice.
Okay.
Make sure you are consistently making profit. You understand? Even if you lose, that's the reason why today we are putting on the money management and then risk management. Even if you lose, how much are you losing? How much are you making? If I place 10 trades today, okay, and I win five, and I lose five, and my risk to reward ratio is 1:10, or 1:3, or 1:5. At the end of the day, if I win three trades, okay, and I lose one, I'm still in profit. If this thing happens for consistently for about 10 times, I'm still in profit. You understand? So if you don't have good management, and then risk management, and then money management, you keep on losing the forex market. You keep on losing. So today is very, very good as we are all on board trying to educate people, teach them all about forex, and then especially the money management, risk management, and then the psychology. It is very, very, very important. Very, 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 very important. You understand? Okay, so I'm going to talk about one part of the business which people don't really know. Okay, so business development manager in forex trading. Yes, so there's another area people don't know it really exists. But the foreign exchange trade companies, they really employ people as business development manager. What do? They go out, get people into the business. So let's take a company like XM or Hot Forex or Be This Way. They have people who go in to get the big guys to put in money into the business. They trade. While they are making money, the forex trade company also makes money. I would like to put this in across. Forex trade companies doesn't trade against the individual. They don't trade against you, the retail traders. People think they trade against them.
I'm glad you've been able to debunk this. This
Yes.
rumor.
Especially when we are losing money, we think they are trading against. I remember with my colleague, we said that we're like, these people, is it they are trading against us? So until we had education, we entered into the business very well. We got into the forex business very well. We're like, okay, no, they were not trading against us. Everything was our mind. There was mistakes we were doing where we didn't know. You understand? If I compare myself now to those days, I could see that there's much improvement, and I'm very proud of myself. I'm proud of my colleagues too. You understand? So I mean, business development managers, they go and get the big guys into the business. Once you place your trade, the spread, and then the swap and commission, all those things, they make the first trade company money. That is where they get their money from. So they don't trade against it. These business development managers go in, get people they talk to people, do the advertisement and all, meet the big guys in the industry. Can you put in money into our business? Put in $50,000. Great. We'll give you this commission. We'll do that. We'll do that. These people go in and get the people in. So if you have somebody who have very good communication skills, you have a background in communication, accounting.
Yeah.
I mean, you have that kind of background.
Okay.
I mean, you could get into that side of the business. You could get into that side of the business. You have to know how to communicate to people. You should be able to persuade people into one particular thing. Be persuasive. Yes. So there's a whole lot. And another one I would like to touch on is the forex analyst.
Okay.
Yes. Sometimes we call them research analysts. So this person goes into the charts, that is for the technical, okay?
Okay.
See where we are going to be entering trade, where we are supposed to exit, and all. You understand? The support, the resistance, how do I put it? The demand and supply, okay? That is the work. And then secondly, it also goes to the fundamental. He watches the news around that particular place, goes into what is happening. Is there going to be any news concerning these two pairs I'm going to be trading today? Okay, is it going to affect the trade? You understand? And then the market sentiment. He looks at all these economical factors, everything before getting into trade. So these people, the market analysts are very, very important. At the end of the day, after you've gone to get the people on board and you're trying to help them, these market analysts will put things on your site every day and updating your people. This could be the possible thing happening the next day, the next 2 days, or a week. You understand? So, I mean, with a market analyst, I feel if you are very educated around you have a background of, let's say, economics, okay?
Okay.
Of accounting and finance, you blend all those two together, and then your personal training in the forex market in general. I think you have a background around that area. It could also help you get into that part of the business.
Okay.
Okay. Yes, and then also psychology. You can, if you have a degree or something in psychology attached to it, it helps you. It helps you because in this business, that's the thing. Psychology plays a major role.
Yeah.
Okay.
Yeah, exactly.
You have a background around that area, so it really helps you do that. And then we have forex, we have accountants. So when we enter into the forex brokers, they have these people managing the funds in and out. That is for the firm itself. Okay.
Okay.
So if you have a background around this accountancy and everything, you can also go into that field. And then the IT. These people are very, very important. Sometimes you could be trading and you're like, okay, you can't make deposits. You've done deposit and this is that. These people really take care of all these things, okay? The software engineers, the computer engineers, all the people on the IT part, they really play a major role. You understand? So if you have somebody who has this background in computing, I think that's another field you can look at.
Okay.
They really need such people on board. They really, really need such people on board. Okay? All right. And then so I think for now, is there any question?
So from all that I have gathered, you are trying to say that when it comes to job opportunities in forex trading, you don't necessarily have to know how to buy and sell. Once you
Yeah.
are able to like do anything accounting, anything like ICT, you would find a job somewhere in the forex industry. Is that what you're trying
For
to say?
you, that is it. That is it. That is it. You can actually find a job and that
Whatever
field.
you can
So I mean, not
mention.
only just about the buying and selling. Initially, that's what we thought, but it is more than that. That's what I keep on saying. If you have a background in all these areas I've mentioned, it will really help you. You understand? Yes. Even though we are still our own CEO working for ourselves, we are still linked to this some of the firms. We're still working hand in hand with them. You know,
Yeah.
because I mean, recently some of the companies came to Ghana. We had a meeting.
Okay.
Almost about 3 companies came to Ghana last year. There was a meeting, best 10 people trading in Ghana. We had a meeting. I mean, what they want to do in Ghana now, how are they going to be able to do that? Can we help? You understand? All these things, I mean, it's a major thing we have been talking about 5 years ago. And now I think we are doing well. We're trying to get the big companies here in Ghana. Now, BD Swiss in Ghana, BD Swiss is in Ghana. They've really established themselves now in Ghana, and I think they are doing very well. You
Okay.
understand?
Yeah.
We are now waiting for XM and then Hot Forest to join, and let's see how best we can also, do well in the industry.
Okay.
You get it?
Okay.
So I mean, it's not only just about the buying and selling. If you go really into it, it is even more than
It's
that.
more than the
It is
buying and
even more
selling.
than that. It
Okay.
is really more than that. Yes.
All right. Thank you very much, Mr. Akorli. Now, I've
Okay.
seen some raised hands. Please note that there's going to be a Q&A section at the end of this discussion. That's going to be around 3:30 to 4 p.m. So please, You can leave your questions, or you can wait when it's time for the Q&A, then you ask your questions. Thank you very much. We are listening to you, Mr. Akorli.
Okay, so if is there any question? There's no question, right?
Yes, for now there's no question. Everything is loud and clear. And if you can show us how we can get into that space, yeah, how to
And to the
apply, how to go
oh,
about
okay.
it.
So one company I can say you can reach out to is Be This Way. You can go to their career page, and then you keep on searching. When you see the career page, you see the opportunities there. You apply.
Okay,
One, look at what they need. Look at the things they are looking out for, and then you make sure you proceed with your CV and your resume to meet up with that. You don't just apply. Okay,
okay,
see if you meet what they are looking for, and then you know how to document everything, and then you put it out there. I think XM also have a page on their career site. You can
okay,
also go see that. And then Hot Forex, I know they also do that. I
okay,
think Jeff Forex is about setting up their own career page. But for these three companies, I know at least they do something like that. You can go check them out. Especially with Be This Way, they are very, they normally do that. Constantly, they are employing people in the business
okay,
because now they are in Ghana here. They are constantly employing people in that business.
okay,
Okay.
all right,
Okay. If you are so, I would like to say this thing across before we go on.
okay,
I would really advise, since I don't know those who are really forex traders in here or those who want to start trading or whatever, I would advise if
okay,
you start this business, you have to be very serious about it. People do this thing full time and they are really doing well.
okay,
Okay. One, do not take anybody's money to trade. That is one advice I would give. Do
okay,
not take anybody's money to trade. Okay?
okay,
And then if it is your own money, use the money you can afford to lose.
okay,
If you lose that money, you know that it's not really going to affect you in any way.
okay,
Use the money you can afford to lose. Okay? Having said that, it doesn't mean you are just going to trade anyhow. Okay? You go in there, take your time. When you lose, you wait. You see another opportunity before you enter. You have to really place trade when you think there's opportunity. When we started trading, sometimes the act of the pips and then the candlestick moving alone, it is a happy thing for us. And we want to just place market or place trade when there's no opportunity. I know there's going to be that feeling for the newbies, okay? But have patience. Enter trade only when there's opportunity to really go into the trade.
okay,
Okay.
all right.
Yeah, that's what I would like to put up. You wanted to say something here.
Okay, all right. So Andy, I'd like you to talk about IBs and partners. How can those of us listening to us or watching us get into IBs and partners? Because I know that you have been an IB for Hot Forex and other brokers. So can you talk more
Yeah.
on that for us, especially for people who are interested in those areas?
Okay, so I've been an IT for Hot Forex and XM from 2014.
Yeah, but please,
And
can you at least break down what an IB is so that the newbies can
okay, so
understand?
IB is called Introducing Broker.
Okay.
So what happens is, let's say with my academy now, okay, when I train people,
Mm-hmm.
obviously I will tell them register under this particular broker because they are good, they are this, they are that. When you enter, you just enter that particular company. What I do, I have a link which was produced or got to me by the 4K company. So I'll just give that to you. When you click on that link, you just start registering, okay? Automatically, when you register, you become my ID,
Mm-hmm.
meaning that I'm the one who introduced you into that particular firm,
Okay.
okay? So what happens is any trade you place, the company makes their own profit, and out of that profit, they give me a cent
Mm-hmm.
out of it. So
Okay.
imagine I have about 1,000 people
Mm-hmm.
all placing trades, and the company is giving me, let's say, $5 per lot. I know some of us know what lot is, okay?
Okay.
So if the company is giving me $5 per lot,
Mm-hmm.
multiplied by 1,000 people, it is a lot of money.
Okay. So it's like you gaining
It is a
commission of.
Yes,
Okay.
it
Okay.
is a lot of money.
Okay.
And then one thing about it, when they see that you are really bringing people on board, they now call you and give you special offers. Okay, we are
Okay.
seeing you are doing very well. If you get these people more in addition, I think this is what we can do. Instead of giving you $5 per lot, we can give you $10 per lot.
Okay.
This is the way of motivating you. You
Okay.
understand?
Yeah.
So once you are trading, you're also making money from bringing people on board. Okay, and then this person I brought on board also brings somebody on board.
Yeah.
Okay,
Yeah.
the second time I also get money, and I also get money out of that. You see how it goes?
Yeah.
So one way or the other, the money getting it keeps going on and on and on. You understand?
Yeah, I understand.
So the ID is very, very good. ID, sometimes in a month, if you go to check your account for only the ID alone,
Mhm.
I mean, it is awesome. It is
Yeah.
awesome. Like, wow, you're really doing well. So, I
Yeah.
mean, it is a very good thing. Well, you don't just have to join. At least people are going to talk to their friends about what we are doing here today.
Hmm.
Make sure when, after you register, you talk to your people, let them get a link, register under you as time goes on. You understand?
Yeah.
Because I know after here, probably they will be getting a link to register with particular brokers and all.
Hmm. Yeah.
Okay?
Yeah.
After that is done, they should also talk, get their own link, keep registering people under them. This is how the business goes.
Yeah.
Okay? This is the largest market in the whole world. So imagine everybody can get something out of it at the end of the day.
Yeah.
Okay?
Yeah. Yeah.
Yeah.
Okay.
So basically, that's what the idea is.
And can you touch on the partners as well?
Okay, so with the partners, it depends now. Every broker and how
Operate.
they, they operate.
Okay.
Okay, so the partners, some they could really contact you in person. Okay, that this is what we want to do here in this country, or we want to do this part of the world. How best can you help us? We want to set up this firm, part of the firm here, be here, employ people for us, and then we can do business. So for the partnership, it's a whole lot, a whole lot. It entails a lot. And then every broker and how they build. You understand? So I can't pinpoint and say that this how it goes because it is a whole lot. They sit down, they make plans, and then they go into agreement with that kind of thing they want to do concerning the partners. It's a whole lot. We
Okay.
can't pinpoint one particular thing. You understand?
Okay. Okay. I
Because I
understand.
can see with XM, their partnership program is different from Hot Forex. You understand?
Okay.
Yeah.
All right. So
Yeah.
we have about 5 minutes to wrap up with Mr. Andy Akorli. And just quickly, just give us a summary. How can you get ourselves into that space? Just a quick summary for those of us who just joined few minutes ago. Just a quick summary how we can get ourselves into.
Oh, so I keep saying you just go to the internet, you go to the website of this. At least I know these three companies which they are doing well. Be this way, Hot Forex and Extend, their career pages. You go there and then you apply. That is it. But just try and educate yourself. Make sure, see, even if you are picked, they will have to interview you. But the moment you are not good in your field, they will just know. These people are very experienced. So you have to make sure when you're going in there, you are prepared. I remember when I was first called for my interviews and all, it wasn't easy. All these companies will call you, and then you see what they are putting there. If I didn't have much knowledge on the field, I mean, it was going to be a very hectic day for me. But at the end of the day, because I knew what I was doing, I got through. So I would say that people should just try and learn, educate themselves, get somebody to mentor them. Okay?
Okay.
And then I think at the end of the day, they'll be good. They'll be good.
All right. I hope
Okay, so
there are also job
let's give this thing
opportunities
across.
for. I hope there are also job opportunities for people in the creative space, like graphic designers, video.
Oh yeah. Sorry, I didn't even touch on that. I knew you were going to talk about that. So I mean, I'm sorry I couldn't touch on that.
Yeah.
So in fact, when you go to the site, okay, you
Mhm.
see how the page of the company has been, designed. Okay,
Yeah.
these are the graphic designers who do all these things for
Okay.
the companies.
Yeah.
Okay, I remember I even introduced somebody. I think you are aware of that. That's why you are really laughing. I mean, so I mean, I introduced one of our guys to the company, and it's really making much money out of that stage.
Yeah.
So I think the graphic design they are really doing well. Sometimes you go to some site, the way the place is even designed, you don't find it interesting with Frederick. You
Yeah.
understand?
Yeah.
But you go to a page like Be This Way, you go to a page like Hot Forest, you go to a page like XM. In fact, the interface alone,
Yeah.
okay,
Yeah.
and there's something that boosts your word. Okay, they are just simple,
Yeah.
simple but nice. They are simple but nice. So the graphic designers, I mean, yes, you can get into that space too. And then in case at the end of the session, everything, I think those people who want to like to train, Paradigm Forex Academy, we are also there to help people. Okay, in case of anything, you can contact the same people organizing this program, and then we can take something out of there. If you need the training, the mentorship, the education, anything concerning forex trading, we are there. We are there. We are also partnering with FPGFX, so that is what it is. Let's just try and make money together.
All right. Thank you very
Yeah.
much, Mr. Akoli. I know there are lots of people who have questions, but there's going to be a Q&A section at the end of this whole discussion from
Okay.
3:30 to 4. I know people are already asking questions, but please be patient with us. We will get to that. Yeah. And Andy will also be waiting for you to answer those questions for us.
2:30 to 4. Oh, I'm here.
No,
I'm here. Don't worry.
3:30.
I'm here with you guys.
All right. Thank you very much. Now,
You're welcome.
this has been a very insightful discussion with Mr. Andy Akorli. And I know that now we know that there are certain job opportunities that we can also get in this forex space that is not technically related to just buying and selling, but then also using the skills that we have, like graphic designers, video production, and accounting, HR, and all of that. So yeah, as he rightly said, please go to the website and then read on their, things that they offer as employment opportunities. Thank you very much, Mr. Akorli.
All right. Thank you for having me here.
Okay. Yeah. So next we have investor Maybach. He's Mr. Rutherford. He's here to share with us what trading strategy is and the importance and what it means. Yeah. And just before he starts, I just want to state that he's a $12 million account manager, and he has won several awards globally. So yeah, and currently he's a brand ambassador for BD Swiss. So yeah, that's all about Mr. Rutherford Orlean Banks. So yeah, I would say, Mr. Rutherford, can you hear me?
Can you guys hear me, please?
Yes, please. We can hear you, Mr. Maybach.
Okay. Um, Good day to everyone on this call.
Yeah.
First of all, I would like to extend my appreciation to everyone who has actually made time to make this happen.
Okay.
Um, when I
Investor
had the
Maybach,
call,
should we give you the chance to share your screen, or it's okay for now?
um, I think for now
Mhm.
it's okay.
All right. All right.
When the need arises, I will let you know.
All right. All right. Sure. Okay.
Okay. So thanks for the introduction once again. My name
You're
is
welcome.
Rutherford Orlean Banks. I'm actually a professional trader and an account manager as well. And I would like to share with you, like it's been the plan, some trading strategies and all of that, you know, we've all been hearing about these kind of things in the market
Yeah.
for a very long time, that you see new forex traders and the only thing that they are interested in is, what strategy do you use? What strategy do you use? What strategy do you use? I personally get a lot of these questions every single day when I meet people, or I think 3 days ago, this last Thursday and Friday, I organized a 2 days boot camp,
Okay.
and majority of these questions always keep popping up. And I think it's high time that we have to, direct people on a certain path in this
Mm-hmm.
market, because there are a lot of illusions out there that
Yeah.
a lot of these guys are buying when, with regards to this whole forex trading thing. Because I've actually been in the market for 10 years,
Wow.
right? And it's been an absolute fantastic experience for me, regardless of all the ups and downs that I've been through over the years. And those of you who uses Hot Forest, when you go to the Hot Forest Hall of Fame page over there, you will see me actually like 3 to 4 times over there, and all of that. So I have the track record. I have, everything that I need for me to be able to talk to new traders about what they actually need to succeed in this industry
Yeah.
in the long run. So when you talk about trading strategies, um, in a layman's view, what does that mean? As someone will ask, that okay, boss, what strategy do you actually use? But me personally, I think the idea of trading strategies in the forex market um, is highly overrated.
Wow.
The idea of trading strategies in the forex market is highly, highly overrated.
Very okay.
Why am I saying that? When people hear about trading strategies, all they hear about is, how you can combine, some setups, what if it's indicators that you're using, if you are a pure price action trader, if you use some sort of high frequency systems and all of that. That's what people actually think, that um, those are kind of strategy that I use. But I think we live in a very dynamic market, right?
Yeah.
Not the forex market alone, the entire global financial market, the forex market, the stock market, the crypto market, the commodities market, and all this market, none of them is actually a static market. They are all dynamic market. They are market that respond to different circumstances over a particular time or over different periods of time. And that is one thing that we need to understand when we are talking about this concept of trading strategies that people are so fixated on, because we hear about people saying, okay, this is the kind of strategy that I use. I use this strategy simple because this is the type of market that I trade. But if you develop a strategy, let's say me, for instance, I'm a pure price action trader, right? I don't use any indicators. I don't use all these fancy stuffs on the charts and all of that. But, I have been able to, find my feet and find my way up at the top of this market thing, because I'm a highly profitable trader.
Yeah.
And I've been doing that consistently for years now. And one thing that I've realized in this market is that majority of these people who fantasize themselves with the concept of having a specific strategy to always trade this market are actually following what they don't really know, have enough details about. Because let's say I'm a swing trader, right?
Okay.
Let's say I'm a swing trader, because personally I day trade and I swing trade as well, depending on the conditions that the market gives me. So let's say I'm a swing trader. Let me take that for example, that I'm a swing trader. And I'm starting my analysis from the weekly charts, coming down, doing a top-down analysis. That, okay, I hop on the weekly charts to actually look at the overall trend of the market on the weekly. I come down, I descend down to maybe the daily chart, and I descend down to maybe the 4-hour chart as well, as a minimum time frame that I'm going to look at when I'm swing trading. And in this same scenario, if I'm using a pure price action strategy, which maybe combines maybe some demand and supply areas and some candlestick patterns or some chart patterns, or all this fancy stuff, then I give you the same strategy that I use, that I have.
Yeah.
And you are not a swing trader, but you are rather a day trader, right?
Yeah.
Let's take an indicator like the moving averages.
Okay.
With the moving averages, we all know that the 50, 100, and 200 day moving averages are for long-term filtering of trends in the market, right?
Yeah.
And I have these 3 moving averages on my chart, because when I'm swing trading, I always have these 3 moving averages on my chart when I'm swing trading. So let's say I'm swing trading. You don't know whether I'm swing trading or not. And I give you my strategy, the exact strategy that I use. Maybe I have some course that I'm selling online. And this course actually specifies that this is the exact strategy that I use. I don't give any specification that whether I'm a swing trader or I'm a day trader or I'm a scalper. I just put this course out there, take whatever money that I need to take from people who patronize my course and buy them. Then you buy this strategy that is meant or that I developed for a swing trading market, and a day trader or a scalper, and you apply this strategy on the charts. I think at the end of the day, it's not going to work for you as perfectly as you envision it to be, because when we talk about all these, long-term moving averages, they don't work as efficient enough in lower time frames. You don't expect to apply a 50, 100, or 200 day moving averages on a 1 hour or 30 minutes or 15-minute charts. They are not efficient in that field, in that market setting, in that market field. So when people talk to me about all these strategy things that I think is very much overrated in the forex market, I pin their mind back on the concept of you being a dynamic person in the market.
Okay.
Dynamic is very, very important in this business.
Okay.
And in forex trading, simplicity is the best thing that you can apply to your persona as a person. That you don't have to overcomplicate things. You have to always keep things very simple and very compact as far as you make it with it, right?
Yeah.
So, um, so I always tell people, or I always advise people that when you ask me about the strategy that I use,
Yeah.
I will give you a general broad view about me being a pure price action trader. Because when I meet people, when I meet professional traders, and sometimes when I meet new traders, and sometimes they ask me, "Hey, what strategy do you use?" I just tell them, sure, that I'm a pure price action trader, but I'm not going to go into details about the exact version of the price action that I use or the exact things that I use on my chart when I'm doing this price action thing, right?
Yeah.
Because I believe that whatever strategy that I've built, it's not because maybe I don't want to give you that same strategy, but whatever strategy that I've built this strategy over the years according to the kind of person that I am.
Yeah.
Believe me or not, believe me, as a trader, your edge as a trader is not on the chart. Your edge in the market is you, the human being.
That's
Edge
very valid.
in the market is not what you see on the chart. And I don't know the number of professional traders on this call, but I want to make it clear, very clear, because I have the experience. I've been in the market, experienced a whole lot of things. I've made so much money in this market with all the concepts that I'm dishing out right now. So I believe that your edge as a trader is not on the chart. It's not the support and resistances you see. It's not the candlesticks you see. It's not the moving
Yeah.
averages you see.
Yeah.
But your edge in the market is you as a person.
Okay.
Because
Okay.
when I was doing my boot camp a few days ago,
All right.
there was one thing that I told everybody who was in attendance in that boot camp, that the only problem that you have in this market, or the only problem that is going to prevent you from achieving your dreams in this market, is you. It's not the market.
It's not the market.
It's not your lack of capital. It's not your lack of strategy. It's not your lack of mentorship. Because you can actually have the best mentors that you have, and you still wouldn't be profitable in this market. So at the end of the day, I am a serious advocate for you building yourself as a person if you want to survive in this business.
Okay. So when
You
you
need to
say
build yourself.
building yourself as a person to survive, what exactly are you trying to say, especially for newbies who are watching us? When you say build yourself, is it like the mindset, the
Okay.
education? Like,
So I have this concept that like I said, I touched about in during my boot camp, that I taught them how to build a superhuman mindset to succeed in this business,
okay.
right?
Okay.
And when I talk about how to build a superhuman mindset to succeed in this business, it comprises a whole lot of things that you need to put in place, because trading is a purely psychological business. Because what you see on the chart as the candles is just the psychological imprint of a group of people,
Okay.
right? What you see on the charts, on the candles, the moving averages, and all these key levels that you see on the chart are just the psychological imprint or the psychological reflection of the collective decisions of a group of people. But the reason why they represent these collective decisions of all these people with these charts is because it is a big global market that, we don't even know ourselves. I don't know the next trader out there. I don't know the number of orders that the banks are putting in, the hedge funds are putting in, and all these institutions are putting in. So the only way that we can actually have a clear reflection of what is happening in the market is the chart that has been provided to us.
Okay.
And that is why we use this same chart to make the decisions that we make on a daily basis.
Okay.
So I keep on saying that your competitor is not what is on the chart. Your competitor is the kind of people or the number of people out there that you think are going to make this particular decisions at a particular time. But the good news is you can actually make this decision, or you can actually read this decision-making process of all these people from the charts in simple terms.
Yeah.
So the superhuman mindset that I talk about every single day that you need to build as a trader, first of all, it starts with discipline
Okay.
as a person. That is the first one. It starts with discipline. Because if you have zero discipline, you can't succeed in this business. Because people talk about patience, but I always talk about patience is a trait that is embedded in discipline. Because if you are disciplined enough, you will be patient.
That's true.
If you are a disciplined person, patience will automatically be added to it. And I always say this: success in this market is not the matter of intelligence. Success in this business is a matter of character. And character in this business is not built by smart people, but it is actually built by people who have suffered.
Wow. I wasn't expecting that.
I don't know what are you guys understanding?
I wasn't expecting the suffered part.
Yes, you know. So let me repeat it again.
Yeah, repeat it.
Let me repeat it again. Success in this business is not a matter of intelligence,
Okay.
but it's a matter of character, right?
Okay.
And the type of character needed to succeed in this business is not a matter of smartness, but it's a matter of you being the person who have suffered enough. That is why experience is everything in trading.
So does it mean you've really suffered when it comes to this thing? Because the way you're saying it,
Yes, I've really suffered. I've really suffered. And I'm not going to lie about that. And every professional trader will tell you, every professional trader has actually suffered in this business for a very long time.
okay.
Right?
Yeah.
So you build the kind of character needed to succeed in this business when you have suffered enough. Right? And that is where the discipline comes in. Because when you go through all these pains, when you go through all these emotional turmoils, day in, day out on a daily basis in the market, when you are taking huge losses, when the market is hitting your stop loss back and front, you're going to understand what I mean or what I'm talking about. Because I remember during the Russian-Ukraine war,
Okay.
I remember during the night that the Russian-Ukraine war actually started.
Okay.
I had one of the most horrible experiences I've ever had in the market that night, because at that night I was actually trading the Asian session that night,
Okay.
and I fell off to bed. I fell asleep without putting stop losses on my positions, right? And by the time I woke up in the morning, my personal account was down about $120,000.
Wow. That's a lot of
Yes,
money.
that's a lot of money, right?
Yeah.
And it was a very gut-wrenching moment. I was completely shattered at that moment. But I later had to come back to the realization that this is a business that I'm in.
Yeah.
And whenever I encounter these kind of situations in the market, that these kind of unexpected things happen to my account,
Yeah.
I take a long break from the market, maybe like 3 weeks break, maybe like a month break from the market, so that I don't have that revenge edge
Yeah.
to go and revenge the market.
Yeah. It
So
happens
I
a
took a
lot
break.
when you lose money, you'd have the urge to like go back and go and revenge and get your money back. You really have
Yes,
yeah.
yes. So I took this break from the market for like 3 weeks, and I had this friend in South Africa who was down, who I spoke to in the morning, and he was down about 2.5 million as well. You understand? So we actually had a conversation about it. He said, "Hey, let's book some trips and just go
Cool
somewhere
off.
far away without our laptops and without our anything." So at that time when I was going, I deleted everything trading related on my laptop and on my phone. You understand? So that because I needed to get back in shape, get my mind back in shape. And we went on a trip. I went on a trip with my friend. We traveled together. We spent like 4 days, 5 days, during the trip, and we
Yeah.
came back. When we came back, 3 weeks later, it was in less than 3 weeks, I was able to recover all that money back,
Wow.
right? And my friend was able to recover. My friend took like 5 weeks to 6 weeks to recover It's a count. But I took like 3 weeks to recover all my count.
Okay.
So that is what I talk about when, I try to urge people to build that sort of mindset to succeed in this business. And discipline is part of it, because if you are not disciplined enough, you will be swayed from your main goals that you have in the market. That is what discipline can do for you in the market.
Yeah.
The second one that I talk about is emotional intelligence. The second one that I talk about every day is emotional intelligence. When we talk about emotional intelligence, there are a lot of people who keep saying, because someone asked me a question during my boot camp, that how can you switch off your emotions when you are trading? And I said, you can't switch off your emotions when you are trading, because you are a human being.
Yeah.
You are not a robot. If you want to trade without emotions, then you need to build a bot to trade for you, or you need to get some high frequency, machine to be trading for you. But when you are trading manually, you can't remove emotions from the market.
Yeah.
You can't remove your personal, you can't switch off your emotions. And human emotions comprises of 2 things, greed and fear.
Okay.
Right?
Yeah.
We all have an iota of greed. We all have an iota of greed. We all have an iota of fear in us to a certain extent.
Yeah.
But what separates those who succeed in market and in business from those who fail is the ability to find a balance between your greed element and your fear element.
Okay.
The ability to find a clear balance between these 2 things. Because if you get won over by your fear element, you are going to miss a lot of opportunities in the market that should have made you money. Right?
Yeah.
If you get won over by your greed element, you are going to give back a lot of profit that you make in the market, because the market got to key points that you were supposed to take profit and you didn't take it. You didn't take those profit. So what you have to do is you need to find a balance between these 2 demons as a person.
Said demons.
Yes, I term them as demons, because none of them is good.
Yeah.
None of them is good. They are both bad emotions.
Yeah.
But successful traders, because I have a whole lot of millionaire trader friends, and anytime we have a solid conversation about the market, we sharing our losses, we sharing our profit, and we sharing how the market went and all of that. One trait that I get to verify from all of them is the fact that they have all trained themselves to find that balance very well. Find that balance very well.
Yeah.
And sometimes people will say, or somebody will say, that how do you try to find a balance between your greed element and your fear element? And it all boils down sometimes. The first thing that I touch on when they ask me this question is the concept of risk management.
Yeah.
The concept of risk management. Because trading is a business that we're taking some sort of risk, hoping to get some larger reward, something. And there is this saying in the market that never trade with your milk money. Never trade with your milk money, right?
Yeah.
That basically means that never trade with more money than you can afford to lose, right?
Yeah.
Because if you have $500 or if you have $100, and that $100 is what your family is going to depend on to buy groceries in the house or to pay the bills in the house, I don't think it makes sense to put that money or deposit that money into a trading account to come and trade with it.
Yeah.
Because the emotions are always going to be all over the place, and you're going to end up very shattered in the end.
Yeah.
So we always trade with money that we are okay to lose.
Yeah. You don't mind losing. Yeah.
You don't mind losing it. Yes, you don't mind losing it. When you are trading with money that you don't mind losing, psychologically, you get an edge. Psychologically, you get some sort of edge psychologically over your trading, because you are taking risk with money that your emotions and your feelings are not attached to.
Yeah.
And once you gain any sort of emotional attachment to your money, you can't succeed in anything that you are going to do with that money.
That's very true.
It's very, very hard. So I have one philosophy, I have one principle in life and in business, that before I go into business with anybody, I put that person through a lot of emotional intelligence tests to see whether that person is have any sort of attachment when it comes to his money.
Okay.
Because as soon as I realize that about you,
Okay.
I'm never going to get into any business transaction with you.
Okay. So when you say emotional intelligence test, what exactly do you take the person to? Can you give us can you touch on some of the things that you do, the emotional intelligence test?
Well, it's a matter of questions. I have a few
Okay.
questions that
Okay.
I will
Okay.
take you through when we are having a normal conversation. That
Okay.
sometimes you wouldn't even realize that
That is what.
this is my motive behind this
Okay.
question I'm
Okay.
asking,
Okay.
right?
Okay.
And sometimes I was talking to somebody some time ago, and um, I was basically doing this same test, and I asked that, okay, so if you are holding, let's say, $1,000 today, and it's a money that maybe you can afford to lose anyway,
Yeah.
um, but you're not ready to lose it. And with this $1,000, you get into the market, and or maybe you give it to somebody, or you invest in a business, or you invest in a venture, and that money blows up.
Yeah.
How are you going to react to that? And people will say, and this guy was saying that I'm not ready to lose that money. You understand? He was saying that I'm not ready to lose that money. And I said, okay, fine. So how are you going to do business when you are not ready to lose money? How are you going to do business? Because there is absolutely no business out there
Yeah.
that you can go in with 100% risk free like
Yeah.
that. And I have one thing that I say, that a risk free life is a dead man's life, because it is only a dead person, who is actually taking no risk
Yeah.
anymore, because life itself is a
Is a
risk.
risk. I was about to say
So
that.
yeah, life itself is a risk. So
Yeah.
when I meet people who are so shy of risk, who are so emotionally adept to, averse to risk and all of that, I believe these are people who are not matured in the financial sense to actually, be partnered with in any business that consists of money.
Yeah.
Because you can do a business and it can go wrong. Anything
Yeah.
can happen.
Yeah.
I've
50-50.
personally invested in a couple of businesses that in the end didn't go well, right? But at the end of the day, you still need to take your losses and move on,
Yeah.
right? I also personally invested in businesses that have gone really, really, really well, that beyond my wildest imagination. So these are the kind of game that we are playing in the financial world, because all these billionaires that you see on the Forbes list, they are taking the same risks that we are taking every single day. They don't complain. You don't see them complaining. You don't see them, being online writing about Forex being a scam because my position went against me and all of that. And I think that is a pure loser mindset.
Yeah.
That if you come into the market, or if you go into any business with this sort of mindset, you're never going to last that much.
Yeah.
Because once you gain any sort of emotional attachment to your money, you are gone,
Yeah. I agree.
right?
Yeah.
Yes. So that is where the concept of risk management come in, because when I am holding $1,000 account,
Yeah.
and my risk management plan tells me that I'm risking 2% or 3% on each trade,
Okay.
or the maximum amount of money that I'm ready to lose out of this $1,000 is maybe 20% on any given day or any given trading day. And I find out trading opportunities in the market, and I put up my positions. My positions are on. My stop losses, my everything is in charge. I think it is the best form of trading that you can find out there, because you have already accepted your fate before going into the market. You have already accepted that, okay, I'm holding $1,000. and the highest I'm ready to lose on this money on any given trading day is 20%. That is $200.
Yeah.
So psychologically, you've programmed yourself to believe that if you lose $200 out of your money on any given day, you are totally okay with that. So when you go into the market, when your positions are on in the market, running up and down, and the market is doing the usual volatile thing, swinging up and down and all of that, you will have zero emotions attached to your positions. Zero.
That's right.
Yes. So, I think all these things come in, and that is why, if I'm coming back to the real topic of this strategy thing, that is why I always tell people, the market doesn't care about the strategy that you use. The market doesn't know anybody. If you want to actually face this market head to head, it is not about what you see on the chart, but it is about what you see in the mirror. That is you, person.
Yeah.
So you would have to always make sure that you have built your mindset, your mental capacity to the point that, when you enter into the market, nothing scares you anymore. You will not unfazed by anything that goes on into the market. You just hop into the market, take your A1 setups, follow your plan, whether profit or loss. You take your profit, you take your loss, and come back to play another day.
Yeah. Wow.
So that's what I believe.
Yeah. That's a very insightful discussion, Investor Maybach. We have just about 2 minutes to wrap up, and there are so many questions for you. So kindly hang on. They will be able to ask questions from 3:30 to 4 p.m. They have so many questions for you, I know. And thank you so much for taking us through the trading strategies. I like the fact that you mentioned discipline, emotional intelligence, and then how to find a balance between greed and fear. I think if we should combine this with having the right education, it will take us a long way as beginners in forex
Absolutely.
trading. Yeah.
Absolutely.
Thank you very much. Please don't leave. They have questions for you.
No problem.
Thank you so much for joining us.
All right.
All right. So as I mentioned earlier, please, there will be question and answering section at the end of the section from 3:30 to 4 p.m. So please leave your questions in the question section. Okay. So next we have Mr. Nordine Mejd, who is a director at TradingCult, and he will walk us through trading psychology. Yeah.
Hello.
Hello, Mr. Nordine. Can you hear me?
Yes, I can hear you loud and clear. Can you hear me?
Yes, please, I can. Thank you so much for joining us.
Thank you. Thank you for welcoming me. Thank you for everybody who organized this event.
Sure.
All right. So should I get started?
Yes, please.
Okay. So let's talk about psychology today. Before that, I'm going to introduce myself briefly.
Okay.
My name is Nordine Mejd. I've been trading for about 15 years. I started in 2009 when I was just a student. And then in order to further my trading, I really want to get into the industry. So I got to work into several brokers. I live in Cyprus for the past 14 years, the land of the brokers. So all the brokers that my friends here have been mentioning before me, they are all in a closed area here in the city of Limassol, where I live, or Larnaca. So, and basically, I ended up also becoming a CEO of a Forex broker. Now I'm still a director as well in a prop firm and still trading. I've been doing portfolio management for many years as well. I got my CFT, so I'm a certified financial technician. I got also a bunch of other certificates because I wanted to experience both of worlds, the academic and the experience. So I've been trading, but in the same time, I've been also accumulating the degrees. And today the topic is talking about psychology.
Yeah.
I also want to thank my brother Rutherford. In the previous presentation, he's been talking a lot about psychology, so he makes my work a little bit easy because I'm glad that people appreciate how psychology is really important in trading. Because I can say that in my 15 years journey, I've been already getting some good results after 2 years. So you don't need that much time to become, let's say, a successful trader. But the most difficult is to stay a successful trader. And this is where psychology and discipline play a very strong part. So in this presentation, I'm going to talk to you about 3 parts in psychology that for me is really important. So first of all, the trading psychology. Second of all, the personal psychology. And third, the environmental psychology. So the trading psychology, it has been also mentioned in the previous discussion with the investor Maybach. So I really appreciate it. That trading is not just about finding entry point, exit points. It's also about having the right discipline. And the issue with trading is that there's a lot of emotion involved, and the hardest is not to find a trading system, but it's to respect it. So there are several aspects that are affecting the psychology, such as one of the most known, the FOMO, fear of missing out. Once you start trading, you get excited, you see other people's making profit, you don't want to miss on opportunities. There is a news coming out, NFP coming out, for example, and you want to trade like the others, and then you're not following your system. You don't have the right discipline. So the answer to that is really having the right discipline, keeping a journal. It's really important. I haven't been doing it for many years, and now I always have a journal. I'm here in my office, and as you can see, even after 15 years, here is the red book. I keep a journal of my entry. Even after many years, it doesn't matter. My best trading, my worst trading, I always learn from the good and from the bad. So the second one is about greed also. When you start losing money, you want to have some kind of revenge trading and get back this money as soon as possible. When you start to make a little bit of profit, you want to make more, you keep your position open. And once again, the discipline is really important in this case, because you need to respect your plan. As we always say, you need to plan your trade and then you need to trade your plan. So if you have certain entry exit points, you need to respect them. I spoke about the revenge trading, and then on the opposite is the overconfidence. So basically, you will pass a time when you start to make a little bit of money, when you start to be a bit consistent, but it's not enough. You know, the consistency shouldn't be appreciated in a matter of days or months, but you should be consistent in a matter of years. And what happens is that usually traders, it was my case as well, I speak for experience, I had a couple of months of profit and I thought that that's it, I got the markets. I cracked the codes, no matter how many, what position I open, I will always be in the green. And I learned from my mistake, because this is how I ended up burning accounts. So overconfidence is a huge issue. And I'm going to give you a little story as well for all the auditors as well. Once I started working in the industry, I didn't like the work that I was working with. And I started to make some money in trading. And I left my job. Hello.
Yeah,
There is a
hello.
bit of noise.
Yeah, I've done that. Please go ahead. Is it okay
Yeah,
now?
okay, perfect.
Yeah.
All right. So yeah, I quit my job after a couple of months because I was making good in trading, and I was consistent, but I was overconfident that that's it. I could be a full-time trader. And the day that I left my job is the day that I couldn't make any profit anymore, because I went from trading for fun and making some extra money to trade for a living. And it's one thing to trade part-time, and it's another thing trading full-time to pay your bills and support your family. So this is a totally different ball game. So regarding the trading, I would say the first one, the trading psychology, can be fixed by keeping a good trading journal and by really working on the discipline. This is really the most important. Then the second one that I want to talk about is the personal psychology. I think a lot of people don't talk about it, but it's really important. You can't compare yourself with a trader if you don't have the same background. So basically, myself, I come from a humble background. So the first reason why I wanted to become a profitable trader was to support myself, was to support my family, my parents, my brothers and sisters, everybody. I really wanted to become a successful trader for that. Then once I made also my own family, was to support also my wife, my children. And this is really important because everybody have different personal issues.
Yeah.
So some people trade for certain reasons, some people trade for other reasons, and you have to really work on putting those things aside when you are in front of the platform. Because if you trade to make certain amount of money, instead of trading to make certain amount of performance, then I believe that you would really struggle to succeed. So if you have, for example, certain debt, also, Investor Maybach mentioned before, and I'm glad that he said it, is that you shouldn't trade an amount that you are not able to lose. So all of this is really important because if you trade basically an amount that you're not comfortable with, you're already halfway out. You're already almost losing. Why? You should keep it to the demo account, or you should try with a small amount. This is also for all the students, all the youngsters out there, because when I started back in 2009, I was finishing my master's degree. I didn't have much money, and even $100 that I was putting into trading, I didn't have the money at that time to just put again 100, put again 500. So the first thing that I was saying when I started trading was, I need to trade. I cannot afford to lose. And you know that you're already messing up with your own psychology by saying this.
That's very true.
Yeah.
Yeah, that's very. The moment you say that to yourself, it means you're even in for distraction in the first place.
Sorry.
I said the moment you say that to yourself, you're even in for distraction in the first place.
That's it.
Yeah.
You're already working against yourself. The lifestyle is also really important in the personal psychology. Guys, I've neglected that for many years, and I see also how successful trader, it's a marathon, it's not a sprint. So you need to take care of your health. I see, a lot of lifestyle showing out there, people partying or whatever, and not taking care of their health. You have to be careful of your diet. It's really like a sport. You have to be careful of your sleep. You need to keep a healthy style, because if you're successful and you start not sleeping, you don't do sport, you don't take care of your diet, all of these will affect eventually your psychology. So the lifestyle factor in the personal psychology is really important.
Yeah.
And the last point that I want to mention that is also really important is what I call the environmental psychology. When I started trading back in 2009, there was not so much social medias. So because I was doing my master's degree in finance, we started to learn about finance, and I was reading books, and I was reading all the stock trading books. And for example, Livermore's book, which is one of the most known that talks about stock trading, even himself is one of the creator of technical analysis. So he speaks about the trend. He speaks about the importance of technical analysis. He's one of the founder of the pivot points, which is really important. The support, resistance, supply and demand. Even himself, a big portion of his books talks about psychology. And a little story, the guy was born in the 19th century, I believe 1870 or 1877, and he died in 1940. And why I mention about that is because he died out of suicide. The guy shot himself. So even a trader, in the worst case scenario, one of the founder of the technical analysis, one of the most well-known trader, even suffered from a lack of, unfortunately, strength in his psychology. So the environmental psychology, I started, there was no social media. Now there is a huge boom of social media. There is a second wave with all the TikToks and the Instagram and the Telegram. And people follow traders for the wrong reasons. When I started, I used to follow people who wrote books. I used to follow people who had track records. Now they follow people shirtless in Dubai, driving a Lambo. You have to be really careful of that. I believe that this new generation has a huge power in its hand, but at the same time is in great danger of following the wrong gurus. So you need to learn from your experience. You need to spend the time. I met one successful trader once, and he told me, I used to speak about my trading, my technical analysis. I switched to price action at that time, and I'm still trading using price action, just like our previous guest, Investor Maybach. So I'm glad that there are a lot of price action traders as well. And he was telling me, how many hours a day do you spend in front of the chart? And I was like, yeah, a couple of hours quickly. I have my indicators. I have this. I have, and he was like, you know that you should, every single chance that you get, you should spend it in front of the chart. And once I've been doing that, I used to connect my PC to my TV, and I used to watch at the screen, watch the price action, to watch the price movements, and my confidence and my trading capability really got exponential. It increased. I see a lot of people spend a lot of time following other traders in TikTok. It's like these
Yeah.
new waves in which we used to love
Well,
playing video games, and
I
now
don't want
people
not
watch.
to cut you, Nadine, but how do you even know you are following the right group? Because those are the things that attract us to the whole forex trading thing. We also want to be like travel, buy expensive cars and those things. So how do we even know that we are following the wrong gurus? Because they all look
This is
attractive.
very good question. This is a very good question. How do you know that you're
Yeah.
following? You know, for a long time, because I've been doing martial arts since I was 5 years old. I used to do some
Oh,
judo,
okay.
kung fu, kickboxing for many years. And the martial art for me, mentality is very important, so much that I used to call myself martial trader for many years. Now I just call myself Nordin. I
Yeah.
think I'm getting over it. But many people still know me as martial trader. You know, how do you know that you're following a real martial artist? Maybe somebody can put a black belt and maybe he's a liar, maybe he's a scammer. Because when you will go to the ring, you will get knocked out.
Yeah.
So that's why experience is very important. How do you know that you follow a scammer? First of all, you need to check on his track record. You need to test maybe his strategies. If you just follow some signals on Telegram and expect to be rich, well, this person, why does he need to sell you all those signals and whatnot if he's already doing so well for himself? I've been doing portfolio management for a very long time. People that they want to join the portfolio management, they join. People who don't join, I don't need to sell nothing to nobody because already I'm working for myself. If I work on the education, I work on the education by sharing my experience as well as my results. So how do you need to do? People are following Telegram account and you have somebody driving a nice car and he's
Yeah.
like, follow my signals and I'm going to help you transform a $250 account into 2,000 a week or 2,000 a month. I see some silly thing. This is a joke. I mean, I don't know, but people need to be a little bit wise. They need to be a little bit street smart. When you see somebody like that promising you huge results, first of all, start small. Trade on your demo account. Ask for the track record. Another thing that my brother, investor Maybach, mentioned is that the emotional intelligence. You know, you shouldn't be naive. You should use your intelligence. If you want to become a successful trader, you can't have no intelligence and become a successful trader. Learn from yourself. Test the strategies. And if you see that it's not working, then stop. But don't follow the gurus for the wrong reasons.
Okay. All right. I think that answers my question. Yeah, please continue.
Okay, so I've mentioned about the gurus, how it can affect the psychology because you don't realize how important it is. You know, I speak to many traders, and I don't want to be the old fashioned because I'm not that old and I'm still using the social medias. But I speak to traders who tell me, yes, I heard about this strategy. How did you hear about it? I follow those people on TikTok. Guys, read books. Read books. There is nowadays a huge revolution. First of all, with internet, when I was doing my bachelor degree, I had to go to the library to find books. And it was on those years when I was doing my master's degree that Google Books was available and internet was really started to get used. But even the previous generation didn't have internet.
Yeah.
Now, in your mobile phone, you have access to all the information in the world. And on top of that, with artificial intelligence such as ChatGPT,
Yeah.
you can ask whatever question you have and it will guide you toward the right books, the right strategy. So get all that knowledge and test it out. But people are looking for shortcuts. Guys, I don't think that you will ever succeed if you're looking for shortcuts.
Okay. All right. I think I agree with you on everything that you said
Yeah.
concerning what psychology. You mentioned that there's a trading psychology, there's a personal psychology and environmental psychology, and the fact that you
Yeah.
added that we should be reading books, and the fact that now AI has become more accessible. So even with ChatGPT, you can have it on your phone. You can ask it any question, and it's going to give you an answer rather than following these gurus we see on social media. And even if we see something like that and you're interested, we should do our background checks. We should test their strategies to see if it works before we do any sort of investments with them. Is that what she said, right?
100%. I don't say that everybody on social media, though, is a guru. They are
Okay,
very honest
okay.
people. They are very honest people, and I follow some of them. And I started to get to learn more by
Okay.
following some of those people. I can say that out of all the people that I followed, maybe they were not a majority. Maybe it was 50-50. I don't know. I didn't make statistics, but there is good and bad in everything. And I believe you can learn from the good as well as the bad. There are people that they are honestly sharing their experience on social media and want to help people. So but don't take all that information for granted. You can read book, you can cross-check this information, and make your own mind and get your own experience. This is really important.
Thank you very much. But before you go, can you please tell us about TradingCult? We'd love to know more about TradingCult since you're the
Okay.
director. Yeah.
Yeah, so basically, I got involved into the prop firm because there was a lot of different ways in trading. I've always been trading forex since I started, and for example, there was a wave of binary option. I've never started in that wave because I didn't like it. There are other types of waves. I've tried so many strategies. Scalping, I've done indicators. I created my own EAs. I have a database of over 10 proprietary EAs that I made, 2 of them that I still use. I created my scanner. I created my trading panel. With over hundreds version, we passed the version number 100. So I have a real passion for trading. In the prop firm, talking about psychology, I realized that the prop trading is answering a very important question and is not being understood for what it is. So first of all, because there are some strict money management and risk management rules, you cannot pass daily drawdown, total drawdown in the prop trading, but you can in normal trading. So it forces you to have discipline. And the second, these are the 2 main questions regarding psychology that I believe prop trading can offer a solution. It's about discipline through strict risk management. And the second one, it's about trading the funds that motivate you. I started as a student. I know that most of the people that they are listening here will never have a chance to trade their own $100,000 account. Where are you going to get that $100,000 to trade with? You have 2 options. Have a rich daddy or mommy, or second option is to do portfolio management. Let's say if you are young, third option, you have a really good job and you start investing. Yes, but I'm talking to all the youngsters out there. Either you wealthy yourself and so you're trading with 100,000, but you don't trade for the profit. You already have money. Second, you're doing portfolio management. Portfolio management, it's a whole different psychology because you trade other people's funds. You have a lot of pressure. You have a lot of targets. You need to be really careful about that. Okay, now with the prop trading, you can pass the challenge and straight away be trading 100,000 and be sharing up to 95% of the profit. Yes, it's not easy. Yes, you shouldn't reach a maximum drawdown. But why people always want to do the easy thing? There is no successful people who have become successful by doing it the easier way. Once again, I compare with the martial arts or a sport, whatever. You can talk to a football player, you can talk to a boxer. Nobody's reaching the world championship or the Olympics and didn't have hard time. So I believe that the prop trading also offers a solution by forcing you throughout the discipline through the risk management, but the rewards that you get to trade $50,000, $100,000, $200,000 accounts, rather than being stuck with your $500. When I was a student, when I used to deposit, for example, $100 or $200, I couldn't afford more. But the issue why I was losing, my strategy didn't change that much. But my issue is that I wanted to make million with that 200,000. So already I was starting from the wrong foot.
Yeah.
I could transform it to $100 and make 100% in a month, but still I wanted to make more. But if you consider it 100% in a month, that's a huge profit. I've multiplied a lot of accounts. For example, I used to transform $100 into $1,000. And instead of having a break and saying, you know what, I had a good month, let's reevaluate, I would say, well, very easy. I changed now this 1,000 into 10,000, and then 10,000 into 100,000, and 100,000 into 1 million, and then I retire. When I look at it back, I laugh about it, but at that time I was very serious and naive, and I didn't succeed. Long story short, I didn't succeed. I spent years chasing that money. I didn't succeed. And it's once I started to do the thing seriously and take my time that I managed to reach the results that I wanted to reach. And the prop trading also offer you this opportunity to trade the big fund that maybe during the next few years, you're never going to get a chance to trade with.
Okay. Okay. Now, I've seen that there's been certain challenges when it comes to the prop firm industry. What has made yours stand out?
Sorry?
Yeah. I said that there's been certain challenges when it comes to the prop firm industry, like certain challenges. What is your secret? What has made yours stand out over, the test of time?
I believe that there are traders. This is a very good question, by the way. I believe that there are some, I'm going to give you a simple example. I believe that the prop firm, for all the tennis player out there, you have tennis and now you have a wave of paddle tennis, in which it's a smaller court and you can have the ball bouncing everywhere. If you can start, you can start playing paddle and become good at it. But if you were a champion in tennis, you're going to have fun in paddle and become very good. If you've been doing trading in a normal broker, normal forex trading, and you go to prop trading, I believe that you can be doing very well.
Okay.
The issue is that some people don't have the experience. They go straight to prop trading and they say, yeah, I've been disconnected because of this, because of that. But guys, if you want to make some proper money and you get into portfolio management, if you think you have pressure in prop trading, wait until you go into portfolio management. You sign contract with the clients, you still have maximum drawdown that you have to respect. When you make profit, people contact you and they want to make more. When you lose, people get annoyed and they want to get disconnected. There is a lot of emotion involved in there. So if you think you're just gonna, and I can see as well that my previous investor Maybach has been doing portfolio management. I suppose he's been going through the same stress as well. I don't know any portfolio management. The worst stress that I've been wasn't for my trading, but was from the portfolio management, because not only you stress for your strategy, but you also stress because you're not trading your money and you don't want to disappoint your investor. And in prop trading, you get to trade large amount of money. You don't have other investor, only the prop firm invest in you. So I believe that it takes a huge pressure from your shoulder, and people should take their time, trade demo accounts, trade demo prop trading, and not try to rush and get into the hundreds of thousands immediately.
All right. All right. Thank you so much, Nordine. This was very, very insightful. And
My
I know
pleasure.
they have so many questions to ask you, but it's going to be right after the next speaker. That's from 3:30 to 4 p.m. So please don't
Sure.
go, stay, and yeah.
Okay, I'm right here.
Thank you very much. Okay, so we are on to the next speaker, who is in the person of Mr. Robert J. Van Eyden, who is the CEO of Scopes Market, which is based in South Africa. Mr. Robert, please, can you hear me? Hello, Mr. Robert.
Good afternoon, everyone. Good afternoon,
Hello,
Madam.
good afternoon. Thank you so much for joining us, Mr. Robert.
I've got a presentation, so is it fine that I share with it?
All right, sure.
Okay. Just before I share the presentation, so I come from a very different background. So I've been managing traditional stockbroking firms and online trading firms. So I've seen a lot of mistakes clients have made over the last couple of years.
Okay.
So that's the angle I bring in. And I also have mentored a lot of people in terms of, trading mistakes and trying to get them to success. And all of this culminated in a book that I wrote, which was published last year, called The Badass Trader. So there's no secret sauce in the book, but it tells you a lot in terms of how to manage yourself and how to manage psychology, as with the previous speaker as well. At the end of the day, it's all about psychology. And there's a wonderful quote. I'm not sure people attribute it to Mark Twain, which basically states it's easier to fool people than to tell them that they have been fooled. And our industry is quite rife with that as well. So I shall start the presentation.
Thank you.
Let me just get my window. You should be seeing a presentation called Why New FX Traders Lose. Can everyone see that?
Yes, you can see that.
Okay, great, thank you. So when I was asked to present, it's the name of the conference as well this morning, and it's quite interesting. Let me just stop. It's quite interesting. So there's a rule out there called the 90-90 rule, which is applicable to trading. It doesn't matter what you trade, if you trade FX, crypto, equity, CFDs, or futures. And this rule is very applicable to new FX traders. The 90-90 rule basically says that 90% of all new traders will lose 90% of their money, and guess by how quickly, within the first 90 days. So this is the reality. This is the reality, and it's been proven over and over. This is the reality, and there are a lot of reasons for this. The reasons could be potentially getting into the trading fraternity, not understanding what trading involves, not understanding where I will focus a lot on the risk management side, because a lot of new traders, the first question usually when they ask me is, what is your win rate? How successful are you? And I will tell you honestly, my own personal win rate is 36%. So I get it right about 36% of the time. But when I win big, and when I lose little. Interesting. There was a research study done in 2016 by a company called Daily FX, which found out that most people actually call the direction specific in Forex trading correctly. So 59% of their trades were correct, and they lost 40 of their trades. And you can see on the currencies there as well. You know, it varies from about 50%, and it goes as high as 65%. So in terms of currency trading or Forex currency trading, a lot of people got the direction correct. But as I highlight here at the bottom, 50% still lose. Now, why is that? Why is that? So most people get it kind of right, and which is a good thing, but they still lose. Okay. Why do people lose? And this is in my chapter 1. I call it the 4 truths about trading. The first truth is you have to be uncomfortable with uncertainty. Every trade placed, you are not actually sure of the outcome. No one is sure of the outcome. It is a random outcome. It's a probabilistic outcome. No one is sure. If there are people that are sure, you've either not heard of them, or they try to sell you a course. They make their money through selling courses because it is a random outcome. And that's also the reason why it's very challenging, why AI will never be able to predict 100% outcome in terms of trading, because trading is not is an open system and not a closed system. No one could have predicted COVID. No one could have predicted the Ukraine. There is no AI in the world. I read a wonderful research paper the other day that in the next 10 years, AI will be 10,000 times stronger than the human mind. Even by then, it will still not be able to predict what will happen tomorrow and the outcome of your trade. So that's the first thing. You need to be very, very comfortable with an uncertain outcome, and most people aren't. They want certainty. The second thing is you need to protect your capital.
Okay.
One of Warren Buffett's rules, he's got 2 rules. His first rule is to protect his capital, and rule number 2 is going back to rule number 1. If you can't protect your capital, and this is a very important thing, you can't stay in the game. You need to stay in the game, because the third truth is basically you must lose like a winner. There are going to be more losses than wins, and you need to be able to deal with them in a manner. If you've got a 50% win rate, you're going to probably lose 50% of the time. That's But you must make sure when you lose little, and when you win, you lose. When you win a great deal. And then my last principle, winner, chicken dinner, is that basically you're going to make a lot of small wins, and you're probably going to make, if you look at an average year, you're going to make 2 or 3 big wins in an average year. It's the 80-20 principle. It is applicable to trading as well. 20% of your winners will make up the bulk of your capital. So it's very, very important. So a lot of people get into trading, and they go into trading and they don't understand the outcome is random. It is about protecting your capital, not exposing everything at once. There will be a lot of losses, contrary to what the gurus are telling you in their sports cars and their island style living. There will be losses, and you will have few winners that make up the bulk of your profitable trades over any specific time. Okay, so
Okay, so
traders end up losing.
before you continue, Mr.
Yes,
Robert, I have a question. You mentioned that you must lose like a winner.
yes.
Yes, can you please explain that bit? Losing like a winner. I learned successful
Okay.
traders lose. Yeah.
That's a very good point. So I spend a lot of time in the book. I'll do it the other way around. You must also win like a winner.
Okay.
So if you've got a winning system, let's say you're 50% accurate, there will be periods that you will have consecutive losses. And that's where the problem comes in. So when there's loss number 1, people usually accept it. Loss number 2, they accept it. By loss number 3, they start doubting their system, and that's where problems come in. So either they start trading a lot bigger, they apply silly rules to their systems, or they discard their system totally and then they jump onto the next one. Personally, in my trading experience, I've had 12 consecutive losses in a row. So statistically, you will have losses. The other problem, on the positive side, it works on winners as well. So what happens if you've got 3 consecutive winners? I'm a guru. I'm the champion. I am the best. No one can teach me anything anymore. And what do? You become very reckless in terms of, your trading size and your trading position and taking leverage. It's the same principle gamblers have. When, let's say, if you play roulette, you win 3 times on red. What do? You put all the winnings on red, and then the 4th time, guess what happens? You've lost it. Same with trading. So that's why you need to understand that there will be clusters of losses. You need to manage yourself. You need to trust your system. And I'll come to the word, your system needs an edge. If you don't have an edge, don't even trade. I'll come to that.
All right. Thank you
I
so
hope
much.
that answered your question.
Yes, you did. Thank you so much.
Great. So why do traders lose? There are only 3 reasons. It's fear of getting out of a position, because once there's a bias, or there's a bias called the endowment effects. Once we've paid for something, we don't like giving it up. And it's the same for a trade. We get people that are scared when the position they're losing, but they've invested money, so they won't get out. On the other end, for example, you get people that are fearful to enter trading because it's viewed as risky. Then we get the situation of greed coming in. So a trade goes into your direction, and there's no stop losses in place to say, okay, when it turns, you need to get out. Trees don't grow into the sky, neither do trades go up forever and ever. There are plenty examples. There's a wonderful example at the moment. If you look at NVIDIA, it's been going up, and then it kind of like stalled at about $140. And there's an example back, Cisco, a couple of years, about 20 years ago. If you've got opportunity to look at Cisco, did exactly the same. It went up, and then it collapsed. So greed, we are greedy. Once the shares doubled and quadrupled, then we start having these wonderful ideas. Should we, what car should we buy? What island should we go? Which French shop should we visit quite soon? And then it all collapses. And then the worst is hope. when things go wrong, I've even heard people praying about it. Then you're really in the doldrums if you start praying to say, please help me get out of this position. Or you start fighting the market, or there's a glimmer and you start fighting the market. So these are the three horsemen in trading that get most people tripped up. And it's got nothing to do with your signal. It's got nothing to do with the system you're following. It's all got to do with yourself. And like the previous speaker as well, it's about psychology. You need to acknowledge we are human, and being human is actually not a great thing for trading, because we're dealing with randomness, we're dealing with consecutive losses, we're dealing with uncertainty.
Yeah.
Okay, so this is usually what happens, and I shared the stat, 59% of the people got the direction correct, but they still lost money. So they let losing trades run, and they also cut profits to short, is how many traders generally lose money. But it's a function of these three things: fear, greed, and hope. And you can add a lot more to it, but under each one, you could add you've all heard about FOMO, the fear of missing out, in trading as well. It feeds on fear and greed, both ways. Share goes up, FX goes the right way. You need to get in because everyone is getting in. So you have to be quite careful. How do you deal with it? So people, when I was approached to talk this afternoon, it's basically linked to risk management. As I mentioned right in the beginning, that it's easier to fool people than to tell them that they are fools. So it's easier to tell people I've got a win rate of 80%. Like I said, if I started this presentation this afternoon and I said, you know what, my win rate is 36%, I'm sure your audience would have dropped off and said, well, he's a bit of a loser, he can't trade. I'm going to tell you that you need both. You need win rate and you need risk management.
Yeah.
And they work together. They work together. And in terms of risk management, the two good rules, there are many, is basically to allocate about 2% per trade. So that's your position size. Don't allocate of your capital. So if you've got $1,000, you are not prepared to lose more than $200 on $20 on a trade, and then using two stop loss levels. So when you get into trades, you've got an initial stop loss, and there are a lot of ways of applying these stop losses. You can use moving averages, you can visually pick them, you can look at support and resistance depending on where you're going. My one I use the average true range. I like that one quite a lot. So when you put on your trade, there's initial stop loss, and when it breaks your initial stop loss, you get it out. You get out. There's no questions asked. There's no, having a discussion with yourself and debating, the market is wrong, I am wrong, or whoever is wrong. You get out. And then once the trade goes into your favor, you put a trade stop loss, and then it will breach at some point. And if it's a nice long one, your trailing stop loss will generate a lot of profit. But I do see I've got a question. Should I go on or answer the question?
Yeah. Kindly continue. Yeah.
Continue. Great. Okay. So the one simple rule to follow is that when you place a trade, you need to have a risk to a reward ratio. So if you and usually the best guidance is 1-to-1. So if you are willing to risk $50, so you're willing to lose $50. This is the problem. Most people put everything in. They want to lose everything at one shot. So if you put in $50 at a minimum, it's not ideal. You want to make $50. And you can still make money like that. The ideal ratio, and I will actually be coming into it quite soon. The ideal ratio is about you willing to risk $1, and you want to make $2. Because the problem with the 1-to-1 ratio is basically, as I mentioned, there will be a series of losing trades You don't know how long they would last. You know, in my case, it was like 12 consecutive trades. Then you need a lot of capital.
Yeah. Yeah.
This is the magic formula which no one talks about. On the left is the risk to return, and then on the right, at the bottom, is the win rate percentage.
Okay.
Every Hulu, every TikTok, every Telegram only talks about the bottom one in terms of how accurate they are. And you can see you need both, unless you are 100% or you're sitting close to about 60%. So it's very important. So, for example, if you look at mine, I'm sitting at about 36% win rate, and if you draw a line up straight, I am profitable because my win to loss ratio is about 1 to 5. So every time I make 5 times more than I lose. And this is extremely, extremely important to understand. And a lot of people don't spend a lot of time on it because we all get fixated on win rate because that's what we are taught at school. 80% is good, 90% is even better. 45%, that is absolutely horrible. You are useless. You need to find, that's no good. But in trading, you can go as low, as 30%. And if you look at a lot of the successful hedge fund managers as well, they're sitting at about 50%, nothing more. They're sitting with nothing more. And this picture actually demonstrates it quite neatly. So if you've got a risk to reward ratio, you need about 51%. 34%, you require, something's happened. My screen's disappeared. There we go. So this is very, very important for any new person to, and this is where risk management comes in, because to get this ratio correct, you succeed at trading, and this is basically called the edge. It's a function of your win rate, and it's a function of your risk to return or reward, whatever terminology you want to use. And this is very, very important. And this is also a challenge why a lot of copy trading and signal trading doesn't work, because your risk tolerance might be very different to the person that generates these signals. Totally different, because we are not the same. So it's very important, that you also find out from your favorite guru or signal generator, even better, do it yourself, to find out what their risk to reward ratio is and their win rate. Because any slick salesperson only focuses on win rate. And that's why many people are sucked into this vortex of FX and then are very disappointed why they're not making money.
All right. Please, I have a question before we continue. Yes. As beginners, because most of us here are beginners, how do we develop the trading edge and risk to reward? Because we want to make money as quickly as possible. Yeah. So how can we how can we do that?
My recommendation would always be to run a demo account for minimum of 25 trades. So after 25 trades, you can calculate, and there's a lot of information. It's either called it's called the edge. You can get the calculation. It's a very simple calculation. It's not very mathematical. My recommendation would always be to anyone to first do a couple of demo trades. If you are brave, after 25 trades, you should get a fair idea, is your model working? Either the problem is your win rate it could be high, but your risk to return is wrong. So then you need to look at managing your risk to return either through better stop losses, or you need to reduce your capital. So 25 is the magical number. If you look at statistics, they start at 25 samples. That seems to be statistically significant. It's not ideal, but 25 gives you a good idea. So to your question, my recommendation would be a demo account, or if you're very brave, you can use, a small amount of capital and get up to 25 and then test it. And then, in my book as well, I share the formulas in Excel in terms of how to calculate your risk to return, because all what you would do is basically you would multiply your winners by your percentage win, and then you would subtract it by your losers and the percentage win, and then basically that's the way to go. But the problem is, most people, when they get into trading, it's either, they want the quick money. They want to get quickly, earn quickly, and they're not even willing to wait to do 25 demo trades, which is a bit of a problem, because that's why 90% of new traders lose 90% of their capital within 90 days. Instead of spending 30 days, let's do one trade a week, get into it. And this is also a reason why a lot of people don't get funded. Through your previous speaker was talking about the prop shops.
Yeah.
The prop shops care a lot about this ratio, extremely. They care a hell of a lot about this ratio, this edge. So I would urge any new trader to spend an equal amount of time looking at a system that generates some sort of signal, and then once you're in the trade, to manage it correctly through position sizing and then putting in a stop loss. It is critical. This is what most people fail, and why the 1990 rule exists. Is there any more questions?
Thank you so much.
I should have asked questions, so hopefully.
Thank you so much for clearing that up. Yeah, really appreciate that. Please continue.
Okay. Oh gosh, I'm jumping ahead here. Okay.
Yeah.
So this is very important. So this one, every trader, if there's one thing that I would recommend, that you figure out what your edge is in trading, because if you don't have an edge, you can't win. And this is actually beautifully illustrated. About 2 months ago, Roger Federer actually spoke at a college in the US, and this is fresh. So he said that he won 80% of his matches, but his percentage by 54%, exactly the same as trading.
Yeah.
So if it is good enough to win in tennis, why can't we apply to trading? Why do we? And myself as well, when I was also a young trader, I spent all my days and times trying to get to systems generating 80, 90%. I bought the books, I bought everything, and then one day the penny dropped, and the books that were talking about risk management, I ignored, because that's boring stuff. Who wants risk management? It's such a negative word. I like the word winner. And even this stat, and I investigated the stat with Roger. So he won 80% of his games by just being 54% better than his opponent. And again, if you remember those charts I showed you, you need 50%, but you need a slight edge. So he had a slight edge as well. And if you look at tennis, and we're going into Wimbledon quite soon, and you look at most of the top tennis players, they are not. They win their games not by being if they play a very weak opponent, but generally it's about 50 to 60%, and it's the same thing for a lot of the hedge fund managers as well.
Yeah.
They only need 50%. It's the same principle as the casino. A casino has only got a 5% edge, but what do they need? They need people to play all day long.
Yeah.
And this is the same thing with trading. When you get the losers and you get a signal, you come and you play again.
Yeah.
Okay. In conclusion, because I want to leave a lot of questions, because I'm sure I've bombarded with a lot of information, and this is a little picture out of my book. So what do you need for successful trading? You need a mindset. You need to understand you are not programmed for trading. You need uncommon thinking, not common thinking, because you're dealing with multiple losses. You're dealing with a random outcome. And then thirdly, you're dealing with yourself. And then they say the easiest person to fool is oneself. So, now we've got a problem. So you need to be very aware how you're dealing with it. The second thing, which I've mentioned, is risk management. The two big components is basically position sizing is one. You never trade more than 2% of your capital per trade. And once you're in a trade, you always make sure that you've got a kind of a stop, initial stop, and a trading stop. You need a trading plan. You need to treat trading as a business. You would not go into a business randomly and say, okay, we're going to do this and maybe that. You need to say, why do you get into trading? I spend a lot of time with people in terms of why do they want to trade? And most people come up because of the financial benefits. true, but there are a lot of other benefits as well. It can provide you with time freedom. It can provide you with a second income. There are a lot of other. You can trade pretty much anywhere in the world. Those are benefits. It's not the Lamborghini and staying in Dubai and going to your favorite island, because only few achieve that. And most who achieve that, it's either fake or they earn their money through trading signals or courses, not through trading. You need a trading plan. You must treat trading as a business. Then at the end of the day, it's very important to review your trades. And what I do is I look at my win to loss ratio. If I see it's declining, I look as to reasons as to why. And then the last thing, trading success is measured by a series of trades, not by one trade. So if you've had a loss, forget about it. Don't focus about the loss. Over time, you should have a curve coming up, and it's called an equity curve. And that should give you an indication in terms of how successful. One swallow does not maketh a summer, William Shakespeare said, and it's one trade doesn't neither do 10. You need, as I mentioned, if you start trading, probably a demo account, you need 25, and you need to see that you've got an edge or not. I am going to conclude. I'm going to be a bit, I need to promote myself, obviously. So this is my book. I published a book last year. It's basically in two parts. I spend a hell of a lot of time on risk management. I go through an example. I use Amazon where I start with $100,000, how I position the trade, and then in terms of how I manage the trade as well. So the first part of the book is basically 4 chapters. It's about 110 pages. And then the second part of the book is basically for the last 5 years, I've been publishing trading principles on LinkedIn. I published number 253 yesterday, so where I go into the psychology, and the one of yesterday was about quick trading, win, but not, where I go into the idea it's a slow and steady process, and why it's very dangerous. You might be successful and you might have 3 or 4, 5, 6 consecutive trades in a row. But usually, we know how that story ends. It ends in a row of losses. So that's my story. I've gone through it very quickly. There's a lot of information out there, but like I mentioned, do not worry as much about the win rate. Worry more about the risk to return. If I'm putting in $50, I want to make at least $100, and also understand that your mindset, you need to be very prepared how to deal with losses, with a lot of winners. When things don't go right, you need quite a strong resilience and mindset as well for trading, which a lot of people don't tell you about. They tell you all the good stuff and the nice stuff. I'm going to end. On my slot, I've left it for about 8 minutes, 5 minutes for questions, and then obviously I'll be part of the larger group for questions.
Okay. So thank you very much, Mr. But before you go, would you like kindly tell us something about Scopes Market? You didn't say anything about. We'd like to hear something about Scope Market.
Yeah, Scope Market. So we basically in Africa, we are an online trading platform. So in Africa, we've only got 2 offices. We've got an office in Kenya, and we've got an office in South Africa. So predominantly, it's a Middle Eastern focused business with trading in Turkey predominantly, I would say. Turkey is quite big, and then also out of China and out of Taiwan. And we just opened up offices in Taiwan. So we're an online trading platform. We offer all instruments, both cash and leveraged. And the trading platforms is basically we use MT4 or MT5, and we'll be moving across to. We'll also be providing TradingView quite soon. That's my favorite platform at the moment. Yeah, so it's been around and it's growing quite nicely globally.
All right. Thank you very much, Mr. Robert. It was really nice having you
Thank
here.
you.
Yes. Now
Thank
it's
you.
time for question and answer. Please, if you have any questions, please raise up your hands and yeah. Okay, so Cyrus A. Kindly go ahead with your question, Cyrus A. Mm, yeah. Okay, let's move on to Papare. Papare, can you?
Yes, please, I can hear you. Can you hear me?
Yes, please, I can.
All right. Thank you for the opportunity. Um, First of all, I would like to thank you very much for the opportunity. I'll say that this um, meeting has been, webinar has been one of the, great webinars I've ever attended. Yes. And also, I recently had the opportunity to attend to Mr. Rutherford, his Forex Trading Bootcamp, and it was very, very insightful. So I would like to thank him also once again for the opportunity. Yes, to my question,
Yeah.
he gave out a profound statement that in this business,
Mm-hmm.
it is not a matter of intelligence,
Yeah.
but it is a matter of who has suffered enough to gain experience in this business. And if I'm to be real, there
Mm-hmm.
are quite a good number of people out here who have been in this business or this forex trading for quite a long time, in quotes, suffered, but still isn't working out for them. So why do you think this happened? What do you think they are particularly lacking? Is
Okay.
it solely because they are lacking mentals? Because we as new traders, we sometimes see these people and then it sort of discourage us about going on this journey. So I would like him to go on much.
All
Thank
right.
you.
All right. Mr.
Um,
Rutherford. Yeah.
That's such a good question. So I think the average time for a trader to become successful, and there's a lot of research, is about 2 to 3 years. That's the real answer. Why do people not become successful? I think it's a couple of reasons. I think the one reason is basically most people are very, the statistics I showed, they get kind of the direction correct, but then either emotions take over or they do not apply good risk management. Risk management is probably the key at the moment to get a decent risk to return somehow, get a 1 to 2 with a reasonable win rate. So to your question, I think it's most people are very educated. All this information you can get now on the web. That it's all for free. But it's not understanding that you need uncommon thinking to succeed at trading, because we are taught a lot of things like a high win rate is better than a low win rate. We are not used to consecutive losses. In our life, we might lose once or twice, or 3 or 5 times. How do you deal with that? How do you deal with winners as well? And an interesting fact is the more intelligent a person is, the tougher it is for them to trade, because I'm not saying, I'm not disputing that you need low IQ or anything, but it becomes more and more difficult. Why it's a huge challenge for engineers and medical doctors if they want to do this part time, because they have got common thinking, and for trading success you need uncommon thinking and a lot of resilience. You will go through patches, you will have losing months, and like I said, the 80-20 principle, generally 20% of your trades will be that make the bulk of your profit per year. And in terms of your months, probably 2 to 3 months would be the big ones. But you need the resilience of, taking every trade that meets your criteria. But sometimes, after classes, what do? Oh, my system is broken, and then we do system hopping, and we find the next guru, and a lot of good. My own systems, I've learned from other people. I've not developed my own systems, but I have tested them and I have demoed them. I would not go and just because I've had 3 losing trades, what's the flavor of the month now, and just go across.
And top it up with what Robert said. Um, I think the statement that I made about the character being a matter of he who has suffered enough in comparison to he who is smart or intelligence, is the fact that when we're talking about suffering in the market, we all go through those phases, right? That The reason why people spend 5 years, 6 years in the market and they are still not profitable is because they put a hold on the lessons that the market keeps teaching them every single day. You understand? You can be suffering in the market. All the suffering in the market comes from the market itself, right? And every loss that the market inflicts on you comes with a lesson. So the fact that you keep making losses in the market, the fact that you've spent 4, 5, 6 years in the market, doesn't mean that because your experience has warranted you to be in the market for that long, the market should give you some sort of certificate of profitability. No, it doesn't work like that. If you have been in that market for that number of years, you have been suffering that much, and you've not been taking any lessons from the suffering you have been suffering in the market, it won't amount to nothing, right? So, Papa Ray, so the suffering that I'm talking about is every single loss that we incur in the market comes with a lesson. And there is no greater mentor everywhere than the market itself. The market is the greatest mentor that we have. There are things that the market can teach you that no mentor on this planet can teach you. So it is your job, it is your duty as a person or as a trader to actually make sure that that is why journaling is very important. Because at the end of the day, you have to review your trade to see what you did wrong and what you did right. You're definitely going to find things that you didn't do well, that you need to correct them and come back to the market to come and, to come and rectify those mistakes. But if you keep doing the same mistakes over and over and over and over again, you're still never going to get the result you want, and you still keep suffering over and over and over again. So I think those who have spent 5 years, 6 years in the market, and they are still not profitable yet. It's a matter of them not taking the lessons so serious, because they are busy chasing gurus online. They are busy buying all these good strategies and all these bullshit courses online, that they disregard the actual lessons that the market teaches them every single day, right? Because if you keep going out there looking for new information every day, just because you've lost some money today, so you feel you need additional information, so you go and watch the next YouTube video, then come back again. You come the same experience, you go out there to buy the next course, come back again, the same experience, without actually going back to the drawing board about what you are actually not doing right in the market. You just play yourself.
Yeah, I agree
So
with the thought.
so,
Now,
so that's what I mean. Yeah, so that's what I mean. So it's a matter of we taking the lessons that the market gives us so seriously that we correct our mistake, we journal our trades, we come back, then we rectify things that we did previously wrong. And that is how you actually, correct those sufferings that you suffered in the market. But if you keep suffering in the market, if the market keeps inflicting all these losses on you, and you don't learn any lessons from all these things, but rather you go out there to go look for new information every single time you have this experience, you're just going to prolong your journey, and the suffering is going to continue for much more years than you actually think. Thank you.
All right. Thank you very much, Investor Maybach and Robert. Now, since it's a
Thank you
panel
very
discussion, I'd like to throw the question to Nordine and Andy as well. So I'd like Mr. Nordine to go first on this one. Yeah, the same question. Hi. We can't hear you. Nordine, we can't hear you.
Oh, sorry, my mic was, yeah. Can you repeat the question again, please?
Okay. Papa Ray, can you please repeat your question? Papa Ray's mic.
Hello.
Yeah, hi.
Yes. So my question was that Mr. Rutherford gave a statement that in this business, that in this forex trading business, it's not it's not a matter of intelligence, but then it's the matter of who has suffered enough to gain experience in this business. But in the real world here, per what I have seen, my experience, I know that there are quite a good number of people that they've been in the forex trading for quite some time, a long time, but then they are still not working out for them. I want to know why this happened. Is it particularly because they are lacking mentors, or what exactly? Because we as new traders, we sometimes see them and then we feel sort of discouraged to get about or get on this journey as well. So I want to know. Thank you.
Okay. Yeah. Okay. Yeah. I'm gonna give you my point of view. And once again, I always compare the trading to the sport because I think it's good to rationalize it. And okay. So basically, just like in sports, there are some people, and Robert mentioned about Roger Federer. I'm supposed to win all those Grand Slam and be one of the best tennis players in the world. That there is a little bit of talent, if not a lot of talent involved, because there are thousands of tennis players playing and joining and starting since they are young, but only few get to reach the level of Nadal, of Djokovic, of Federer. So I believe, yeah, there could be some talent. For trading, you can call it intelligence, but there is also a lot of hard work, there is a lot of dedication, and there is a lot of discipline involved. I can tell you that I've had a lot of frustration in my trading career. I've seen a lot of people that they managed to succeed way before me, and I went through some emotions of being maybe a bit jealous, maybe a bit frustrated, maybe giving up on trading, but everybody needs their own time. Because if there was a perfect recipe for success, then we would have known it by now, and everybody should follow the same recipe. I know that it took time, and for me, especially because I had a lot of baggage that I was carrying. Whenever I started to succeed a little bit, I started immediately to think of what I can provide for my family, and it took me years to pass this baggage and start to trade for myself. So this is what you have to think about. It's not only the psychological part. Yes, you have your discipline. Yes, you have your money management, your risk management, develop your strategy, work on your trading journal, all of this, but learn throughout the journey. You have to do it with passion. If you are not passionate about what you do, you will give up once the times are hard. You will get too overconfident once the times are good. Just take the time. And I don't know, to be honest, because the only people that I've met that they've been so successful after 6 months, there was just always a hidden agenda. They were not very honest. Me, all the successful traders that I've met have been years in the market. I started to consider myself a successful trader after 5 years, but I realized after 1 year that I wasn't because I just wasn't consistent. And now that I've been trading for the past 15 years, I calm down. I'm not as aggressive as before. I'm not chasing those 100% and multiplying the account as before. I trade much more conservatively. And I consider myself now like a successful trader or professional trader, but it took me 15 years. So just take your time and be disciplined, keep a good journal, and keep learning.
All right, thank you, Northern, for your submission. Yeah, so Andy, yes,
Okay, okay.
yeah.
So my simple answer to him is, if you think you have suffered enough and then you are still making a loss, then meaning that I'll say you have not still suffered enough. You have to still suffer more. Because if you have suffered enough, then you would actually know what to do to get it right. Yes, if you think you have suffered and you're still making losses and then mistakes, I would say you have not suffered enough. Because for instance, I have lost a lot and I have really suffered a lot. And then sometimes back in the days, when you play games, okay, you go into bigger lots, trying to make a huge sum of money out of it. And then you make losses. Later on, you come back to smaller lots, trying to build it up, okay? And then later, I will talk to myself, why don't I start with smaller lots rather, and then try to build up on it? I wait to lose first and then go back to smaller lots, trying to build it up. So as the year goes by, whenever I'm trying to do this mistake, it tells me you made this same mistake some years ago, and you are trying to you should build it up with smaller lots. Then please go with smaller lots. This shows that I've suffered enough, and I don't want to go back to that suffer. Okay, so I feel like yeah. So what I would say is that if you think you are still making loss, then you've not suffered enough. Seriously,
Okay.
you've not really suffered enough. You have to really suffer enough to make changes to your plans. You understand?
All right, thank you, Mr. Akorli. Papa Ray,
Yeah.
I hope your question has been answered.
Yes, it's all clear now. Thank you.
All right, you're welcome. Henry Darko, kindly let us know your question and Henry Darko. Yeah. Henry, we can't hear you. Okay, so we are moving to Cyrus A. He says that with reference to what Nordine said, I find it quite questionable with regards to how you trading account managers for lack of better word pursue or encourage you to enter a trade, whereas you without really know how to kickstart, maybe due to the inverse of formal or psychological something or whatsoever. I don't really get the question. Do you understand? So I think he was referring to what Nordine said. Yeah. Okay, so Magdalene, your hand is up. Let's hear your question.
Yeah, hello.
Hi.
Okay. My question is on the top 10. Um,
Prop
I
firms.
tried,
Okay.
yes, I think Nadine or one of the speakers who talked about that.
Okay.
I went to a top 10 site and I was confused because they were like, you trade with some virtual money and whatever. So, first of all, I want to know what the top firm is, and then what are they looking for in terms of the traders? Is it that you have a certain amount of years to trade, or is that about you being having a good winning rate? Like, what do they really look out for? If they can answer that. Like,
Okay. So yeah. All right. So we'll start with Nordine. I think it's about the prop firms. Yeah.
Yeah. I think we could get another Google Meet one day in which we could go a lot in details into the prop trading because it's a subject in itself. But to sum it up, but the difference between standard, let's say, trading or prop trading is that you get certain types of rules, and then you get to buy a challenge between $100 and $1,000. And this package allows you to trade a certain amount that the prop firm will allocate if you pass those challenge. So those trading rules are not that difficult if you are experienced, but they are very difficult if you are not. So if you just getting started, the biggest advantage is that maybe you will buy a package for a couple of $100, and if you pass the challenge, you will get to trade with $100,000 or $200,000. The disadvantage, if you are a loser, you will lose in forex as much as you will lose in prop trading. But once again, you have demo as well, prop trading. And I really invite every single trader to spend time on the demo account. But once again, in forex, if you don't have strict rules, you can end up losing a lot of money. In prop trading, you cannot lose more than what you invested for the challenge. So if you bought $100 challenge, worst case scenario, you lost this package and you lost $100. But to get more into the details, and I've created a lot of content, and I spend a lot of time educating each trader into all the rules and all the trading strategies to try to overcome those rules and pass the challenge. So I would like to get a lot into all those details, maybe in another
Yes.
meeting.
Sure, certainly. I'm going to throw the same. Thank you, Nordine. I'm going to throw the same question to Investor Maybach. I know that he has a lot of these challenges. So what's your take on prop firms? You can say something.
Uh,
Yeah.
um, well, I think when it comes to profit, um, in this case down here, we have we have a very misconstrued perception about this whole profit thing down here. I've been trading for 10 years, but um, I only started giving attention to prop firms, I think, 2 years ago, right? I think that was 2022. That was the first time I bought my prop account. And I've known prop firms for a very long time, right? But what I think about prop firms is this. Ideally, prop firms are actually, in my opinion, anyway, prop firms are actually not for new traders. And that is what I advise people every single day. Because these are firms that are looking for professional traders to hand over their funds to them to trade, right? And I don't think as a new trader that you don't know your way about your way out in the market. So you don't even have a strategy, you don't even have a plan, you don't even have anything. I don't think it's actually advisable for you to be taking these prop challenges because at the end of the day, the money that you're supposed to be trading and risking small to build that experience. If you go out there buying all these challenges and adhering to these strict risk management tools, I don't think you can survive. So, so I personally, I think I think I think props are good. They are really good for people who know what they are doing in the market. That is either intermediary or professional. I think as a new trader, you don't know your whereabouts in the market and you don't even know what you're doing. I think it's much better if your mentor can actually guide you into actually maybe trading with maybe very smaller funds if it is for you. Even if it's $100 that you're going to use 0.01 lot size, that you're going to use that to build actual experience or actual rates in the market. It's much better than using that $100 to buy a challenge that you're going to end up blowing it in 2 trading days, and you wouldn't gain any experience. You wouldn't have any experience. So personally, I think props are good. I've actually traded prop friends, even though I stopped doing that because of what was happening in the industry from last year or something like that. But before that, I used to trade. I used to manage like a 600 to 800,000 funded on the funded trader before all these things started happening with one friend going that, this friend going and all of that. So that is when I actually decided that I should just focus or concentrate on my personal funds instead of all this thing that is happening there. But me personally, I think they are good avenues, they are good steps for people who have the actual skill but they don't have the funds to actually trade. But not those who want to actually enter the market first.
All right, thank you so much, Investor Mayback. I'd like to throw this question to Mr. Robert as well. Since you are coming from the traditional brokerage like side, what is your take on prop firms?
The platforms have been around for many, many years. It's just how they've changed and made it available to retail traders to participate. But I agree with both speakers in a sense, it's moving from to a more professional environment. So it's critical that you first need to be able to successfully trade on your own because there are a lot of terminologies. For example, maximum drawdown. I'm not going to explain it, but if you don't know what that term means, it's quite an important term in prop trading, and they're quite critical about it. So they look at your maximum. You're not allowed to lose more than 10% a month maximum drawdown. Some even limit, the losses 2%. So my recommendation would be, first you need some sort of edge. If you don't have an edge, it doesn't even help putting down your $100 because you won't make it. And then the second thing is, we've got some very astute speakers here. I do think if you want to go that route, you do need to be mentor and need to get professional guidance from, as our speakers are, they offer that. I do not offer that, but you do need to get mentorship because you're suddenly playing in a different league. You're playing in the A League and you'll get burnt very quickly. And I've seen it also over and over. People look at the $100 wrongly, and you need to understand that the rules of the game are very, very different to what you were doing. And if you aren't even making money on your own, then prop is not the place to be.
Okay. Right. Thank you so much, Mr. Robert. I hope your question has been answered. Okay, so on to the next question. Patrick A, please ask your question.
Yeah, hello everyone.
Hi.
So I have two questions.
Okay.
My first question goes to Mr. Nordine
Okay.
on the prop firm idea. So this idea of virtual fund, how does it work? How does prop firms make money out of the virtual funds that we trade? That is my first question. And then my second question goes to the business development role within the forex industry.
Okay.
So, for example, as a business developer, you are expected to bring in people with deep pockets, people with big accounts. How does it work? Is the brokerage going to trade that funds for the person, or the brokerage is going to train that person to trade their own funds? Because I think I heard the speaker say that the worst, one of the things you shouldn't do is to trade someone's account. I just want to understand how that model works.
Okay.
Yes,
All right.
thank you.
All right. So yeah.
Okay. All right. I'll answer. I don't know if the second question is for me or for
It's for
someone else,
Mr.
but
Akorli. The second question is for
Yes,
Mr.
it's not for
Akorli.
you. The first question
okay,
is for
perfect. All right, all right. Thanks for the question. That's a good question. You're pushing me towards the prop firm. I said I'll make it another one, but it's okay. It's with pleasure.
Yeah.
Basically, how it works, yes, you get to test the strategy and pass the challenge in demo accounts. And basically, if you pass the challenge, then you get to start to trade in the real account. Now there are certain prop firms that they will use the servers of obviously they need it, of a certain broker. In my case, we are using the server of our own broker. So basically, in this brokerage, you already have a lot of traders that they are losing, winning, everything is going in the market. So for the traders that they are passing the challenges, it's part of the risk. They're going into this pool and sent into the liquidity. And basically, this is what you have to manage after that, in which the profitable traders, they will get to share the profits with the prop firm, starting at 80%, for example, going up to 95%. And the losing trader will not incur a huge loss to the broker, to the prop firm, because they still have to follow the strict rules of daily drawdown. So basically, there are a lot of traders that they will pass the challenge, but if you lose 5%, you will be disconnected and you will not be able to continue in your live account. But if you continue making profits, then you continue taking your share into that profit share.
Okay. All right. Thank
All
you,
right.
Mr. Nordine.
Pleasure.
Please, has your question been answered?
Yeah, so a quick one.
Mhm.
So the idea of virtual funds, please, you know of virtual funds, right? I've seen this term being used by prop firms. Virtual funds,
Okay.
Mr. Nordine. Yes.
Yes.
So is it real money? How does it like? Is it real money? If as a prop firm trader, if I'm trading virtual funds and I make profit, is it real money? That is my issue. If it is not real money, how does the prop firms make money out of the virtual funds? That is my issue.
In the challenge, in the challenge, it's virtual money. So once you pass the challenge, you don't get to. Sorry, could you mute your microphone? Yeah, thank you. So in the challenge, once you pass the challenge, you don't get to withdraw the profit because it's on the demo accounts. So this is virtual money. But once you pass the challenge, you get to trade in the live account, and this becomes real money. This is not your real money. This is money that is allocated by the prop firm. The prop firm has a fund, and in this fund, everybody who is passing the challenge, they get a portion of that fund allocated to them. And the maximum risk is the daily drawdown or the maximum drawdown, and the maximum profit, there is no limit. So during the challenge, you don't get to withdraw any profit. Once you pass the challenge, you switch from demo account to live accounts, and in the live account, then you get to trade with real funds.
All right, thank you. I think I'm very clear.
Okay. All right.
Okay, pleasure.
All right. Mr. Akorli, I think the second part of the question was addressed to you. So if you can kindly answer that.
Okay, thank you very much. So with the business development manager, when you bring in the clients, what happens is the firms don't trade for you. What happens is, if you know how to trade already, you do your thing. If you don't know how to trade, they have people to train you. Some of the brokers have specialists like the market analysts, those who train. They'll actually train you, know how to trade, and then before you go into the market, no broker will trade for you. No, they will give you the training if you don't have, or if you already have, but you are not much experience, or you need more enlightenment. They will do that for you, but they will not trade for you seriously. And then also briefly on the prop firm. Some of the prop firm, what they do is, even though it's virtual account, you don't trade with live account. After you pass the challenge, they will just monitor your trades. If it's profitable, okay, they have their own funds, and then they'll be placing the trades you place yourself. Okay, at the end of the day, they'll be making profit on their real account because you're making on your demo. Okay, and then they will use that in paying you. That's how some operate. They will not give you the real account, the real funds you are supposed to use to trade. You still be using virtual account, just that they'll be placing the same trade you have been placing on your account on their own account. They are real money, and when they make profit out of it, you'll be giving your percentage. Some of them, that's how they operate. Thank you.
All right, thank
Okay.
you, Mr. Akorli. I would like Mr. Robert to touch on the role of the business development officer quickly before, yeah, since he's coming from
Um,
hot side, yeah.
yeah, finding a client with a deep pockets, I think that's a global problem.
Yeah.
Usually what happens, two things we see usually is that clients either start succeeding at trading, and that's through a function of education and BDM support. So education is quite important because for every business wants annuity income. So it's in no business interest to have that 90-90 rule playing out every 3 months. So um, basically it is trying to create that stickiness and annuity income. It's like any business, you want reoccurring people, you don't want to go chasing the new ones. So to get those clients with the deep pockets, there are usually two approaches. The one is and it's more the difficult approach, is to identify clients that are doing well. So you would be monitoring their accounts quite aggressively in terms of their win rate, are their profits growing, and to support them, especially through education and potentially mentorship if your company offers that. And then alternatively, trying to focus on clients that have got potentially deeper pockets, and that would usually be professional people, let's say the medical fraternity, engineering, people like that, and start networking in that environment. Yes, if I knew the answer to the question 100%, uh, I can't even give it to you because I don't have it at the moment. But those are the two segments you would focus, and they require very different. But it's a very tough job for most BDMs globally.
All right, thank you very much, sir. We have about 3 questions. So you're going to pass each question to each person, and then we will quickly wrap up. So, um, James and Blank, yeah, can we hear your question, please?
Yes, please.
All right,
Thank you so much for
welcome.
this insightful discussion, and I'm so blessed. My question is about the pure price action. Since I'm a beginner, I'm freshly started in May, and till now I've been losing a lot of money. So um, I want to understand how can I identify the pure price action, because my mentor taught me that support and resistance, trend line, all those kind of things, and I want to understand it clearly. And also, how can I, can I apply it in every kind of trading style, like scalping, day trading, and so on.
Okay, so since Rutherford touched on trading strategies, I'd like him to take this question.
Okay. Um, when we talk about pure price action, we're talking about trading strategies that involves no indicators whatsoever in determining the direction of the market that you are going to take. We have a lot of indicators in the market, and price action traders actually believe that indicators are actually lagging devices because they lag price, right? Because whatever price that you see on the charts has actually been embedded in the indicator already. So price is always what we price action traders believe is that price is always ahead of every indicator in the market because it is the same price that the numbers of these indicators have been deduced from. So when we talk about pure price action trading, we're talking about the type of trading strategy that you don't have to have all these fancy indicators on the charts, all these Bollinger Bands, all these stochastics, RSI, and all these on the charts. You just look at the chart, nakedly. You just go on the chart naked and just try to do your analysis using price momentum and everything that every direct language that price itself speaks to you instead of actually joining all these softwares and indicators on the market. So you as a new trader, as we are talking about, I know majority of new traders actually come into the market learning all these books that talks about different types of indicators and how you need to put them on the chart and how if this one crosses this one, it means it's a sell. This one crosses this one, it means it's a buy and all of that. I think as a new trader, if you truly have a mentor, like you are saying right now, I think your mentor should be the best person to actually take you through the in-depth psychology of how to trade price action. I think it's something very long that we can't actually talk into details on this seminar.
Okay.
But the surface view is that you need to go back to the drawing board with your mentor and put this question. If he is a real mentor and not all these gurus on the internet, maybe he can put you through into details about how you can actually master price action trading to actually help your trading career. Thank you.
Okay. Thank you, Mr.
All right,
Mbai.
thank you. Does it mean that when you trade in price action, you trade like with the bank or against them?
There is nothing like trading with the bank and trading against the bank. There is nothing like that. And all these things are internet gimmicks that they use to take your money, they use to sell signal to you people to just take your money. There is absolutely nothing like trading with the bank or trading against the bank. There is no indicator on the chart that shows that you are trading with the bank or you are trading against the bank. Whatever we see out there is a collective psychological imprint of whatever is going on in the market in direct response to all the activities of the entire market on the charts. So there is absolutely no way that unless you have access to non-public information from some sort of big corporate institution or some big politicians that there is absolutely no way that any retail trader, there's absolutely no website or no material out there that gives retail traders any indication that you are trading with the banks or you are trading against the bank. So I think you should be in that mindset and focus on learning the craft. That's it.
All right. Thank you so much.
All right,
Your
thank you,
question
sir.
has been answered. Yeah. Okay. So next question is coming from Shadrach. Shadrach, please go ahead with your question.
Please, you're muted. The forex.
Shadrach.
Still on mute.
No, the lady. I thought she was speaking. The one organizing it. I thought she was speaking. So she's muted.
Okay. Henry, do you have a question? Henry, do you have a question? I can't hear. Henry Darko, do you have a question?
Hello, I have a question.
Okay, Shadrach, please go ahead with your question.
Thank you very much for the opportunity given. Please, My first question is, please, uh, I think the speakers all have handled some small accounts before, like from the start of their trading journey or something like that. So I want them to give me some insights about people who have a smaller accounts. Like you are trading $100 account. What are some tips or some, I mean,
Okay.
like what you have to do on smaller accounts like $100, or maybe you have a $50 account or something like that.
Okay.
Yeah,
So
and also secondly, the prop firms have some trading competitions they organize every monthly. I want to ask if like it is real, like it is a real competition, or they have their own people whereby they give like they give them the positions or something like that. And thirdly, please, I want speakers to share their maybe their social media handles so that maybe you can follow them. Thank you.
all right. Thank you so much, Shadrach. Now I'm going to give the first question to Mr. Robert since he spoke about risk management. So yeah.
Yeah, it's a tough one when you start with a small account, and I've got a lot of sympathy for people. Because the challenge, if you start with $50, theoretically you should only be, if you use the 2% rule, it's quite a small amount of money you are willing to lose. Um, so I've never personally started with a small account. I usually recommend, and in the book as well, that people start with a decent amount, because the problem with a small account is that you need to trade quite a lot, and that brings other costs involved, and also the cost of time as well. So I always recommend about $1,000 that you need to save up before you get into trading, because that's why a lot of traders also lose, because $50 you can wipe out very quickly. But if you've got $1,000 account, at least your risk to return is a lot more decent. So that would be, it's probably not the answer you want to hear, Cedric, but that would be my answer. Rather save up a bit of money that you can play with a bigger amount. And then to your point as well, in terms of, Madam Speaker, um, in terms of risk management, you do need to apply it. It doesn't matter if you're managing $1,000, $50, or $1,000,000. You need to apply risk management. That's the only way you can succeed, either in your own capacity or potentially getting funded by a prop firm.
All right. Thank you so much, Mr. Robert. Now the second part of the question, I'd like to direct it to Mr. Nordine. It talks about the prop firm challenges, I think. So if you can take it from there.
Yeah, I agree, first of all, 100% with what Robert is saying. And I want to add my experience in this. I cannot say that I've had some disappointment or some good surprise, because I've only had bad experiences by over leveraging myself and trying to multiply my accounts. So during all the time that I've been a student and I started working in a matter of 2 years, I think that my biggest failure is that I learned some strategies, but I applied zero money management, risk management. So you can have a lot of different ways to make some profit or some money in trading. One of which is the performance fee that you get once you start doing um, portfolio management, for example, operating farm. So you're not going to convince a lot of people by having a successful strategy with $100, but you have to start with something. But I'd rather have a 6 month, 1 year history with $1,000 rather than trying to multiply an account and not doing anything. So I wanted to rebound on that. Now, regarding the prop firm, I cannot speak for all the prop firms. I see that a lot of them are doing promotion. But once again, it's the same of all the bonuses that are offered also by the Forex broker. The bonus may have an advantage. For example, you can have a certain competition, have a deposit bonus, whatever. But if you are a beginner, try to avoid only focusing on the glitter, on the promotion, because first of all, as the previous speaker,
Want to affect the sniper.
Maybach investor Maybach mentioned, you need to really work on your craft. It's important. Once you start to get some experience, maybe you will join a competition. You have a chance to win some free challenges or whatever. But initially, really spend time on demo accounts, spend time on reading books, spend time on learning about your psychology in small trading accounts. But if you focus only on the promotion, for sure they're going to have certain trading conditions. Maybe they will have certain objectives. Maybe the people who will win the competition will make 500% in 1 month, and you just it will push you to over trading. So I think that the best way, it's not the fastest way, but the best way to put all your chances on your side to become a successful trader as much as you can be is by focusing on your own trading and leaving aside all the types of the promotions.
All right.
Okay, so please can I go on?
That's one. Kindly go on. Kindly go on. Yes, please.
Okay, please. What about trading and spirituality? I want the speakers to touch on that one too. Spirituality and trading.
Sorry? Trading is
Spirituality and trading.
spirituality.
Yeah.
Okay, what do you mean by spirituality? Tell me a bit more.
Yeah, is trading spiritual, or is there any spiritual traits to trading?
Okay.
This
All right. For this particular question, I would like all the speakers to touch on, and then we will wrap up.
Okay.
Yeah. So please add, through that, and please add your social media handles when you are wrapping up. So in the same order we start with Mr. Akorli, and then we move to Mr. Maybach, then to Nordine, and then Mr. Robert. Yes. Yeah.
Okay.
Yeah.
While I put my message, I will answer. I will answer just 1 second about the spirituality, because for me it's a quick answer. It's when you are the lowest, the spirituality kicks in once you're in margin call. I've never prayed that much when I'm close to a stop out level. But apart from that, no, there are some strict rules. There is some experience. So you have to live spirituality also. Everything has its place. I think you should keep the spirituality with your family, with your loved ones, what is between you and God. But if you involve it in the trading, then you will pray for profit or you will pray not for loss. And that's a part of emotion. I'm a spiritual person myself, but I like to keep it aside of the trading, to answer your question.
All right. So, Mr. Nordine, please, your last word and then your social media handle.
Yeah.
Please, Mr. Nordine, your last words and then your social media handles as
I'm
we
sorry?
wrap up. Please, your last words and then your social media handles as we wrap up.
I share my social media in the message. Sorry, what is the question?
The question is your last words. We are wrapping up. So your last
my
words.
last words.
Yes.
My last word. Okay. I saw a question that's going to be my last word. We spoke about a lot of things. Let me see if I can switch here the camera. I saw a very, very good question.
Okay.
It was about 5 books. So I just have a couple of books here that I have on my PC. I don't know if we can see them. So I'm going to share with you a couple of books here.
Okay.
And I will finish with that. So if you want to start by learning, if you didn't read those books, I really invite you to read the Technical Analysis of the Financial Markets by John Murphy. For me, this is the Bible about technical analysis. Second one, Japanese Candlestick by Steve. Nice on this one also. And once you pass certain exam, like for example, to become a certified financial technician, this is a mandatory. So I invite you. These are also very long books. For example, this one, they are about 400, 500 pages. They have a lot of information. And the thing about reading the top 3 books or top 5 books, just read as much books as you can. If you have to read 100 books, read technical analysis of the stock trends, This one is really important. I will put a little bit bigger the title. People can take screenshot, or once the video will be published on social media, here with the names. I will finish with the last two, technical analysis explained. This one is also really important. This one by Martin J. Pring. About price action, people were asking about price action also, reading the price charts. This one. And I will finish by one of the best that I'm just ordering right now. Here it is. Badass Trader by my friend right here, Robert. You convinced me, Robert. I appreciate really your experience, and I appreciate also all the guests and the hosts. So thank you. I'm ordering your book right now. I just looked at the summary, and this is exactly what I like. So it's going to be one of the book in my to read list. So that's it. I would like to finish with that.
All right, thank you very much. Now we are wrapping up. So Andy, give us your take on the spirituality side, and then you wrap up, and then you leave your social media handles after.
Okay, so I remember when I started trading, when I'm going to be stopped out, I keep praying to God, please let this thing turn back, let this thing turn back, please, please. And most of the time it doesn't work. I'll end up losing my money. And I'll go home saying, God doesn't love me. You see, it doesn't work in the market. Like, the only thing spiritual about this is that you pray to any supreme being, you believe in that. Whatever your plan is, you can follow it. Or he reminds you to follow your plan. That is the only spirituality about it. Whatever your plan is, you have set to do, he should remind you to actually follow your plan. Apart from that, because people have plans, but at the end of the day, they don't follow the plans. Okay? So I feel like if you worship any spiritual being, just remind you to follow your plan. That's all.
Yeah.
There's no spirituality to this. That is the only thing. Yes.
Okay, yeah. Please, can you drop your social media handles?
Okay, so on all the social media platforms, Paradigm Forex Academy, Paradigm Forex Academy.
Okay, Paradigm Forex
On all
Academy.
the platforms.
Okay.
Yeah.
All right.
Yes.
Thank you so much, Mr. Akorli.
All right.
Yeah.
You're welcome.
Yeah. Investor Maybach. Yeah. Can you take us through the last, the spirituality, your final words, and then the social media handles?
It actually very funny, that people try to relate everything with some kind of spirit somewhere holding them back and all these kind of things. Well, whoever asked that question, I would just like to entreat you that there is nothing spiritual about this market. The only spiritual thing that we have in this market is you dealing with the guy in the mirror and your own mindset. There is nothing like you praying to God. If you would like to pray to God or any entity that you worship or you believe in, it should probably maybe be in the other facet of life, But for me personally, I don't think spirituality and trading have any direct correlation, because I'm a highly spiritual person, but I've never and ever related trading and spirituality together or combine them in any way that one will help the other. So for me, I think it's 100% uncorrelated.
All right, social media.
With the social media handles, on IG is investor_Maybach on IG. On Snapchat is the Portfolio Man on Snapchat, and on TikTok is investor_Maybach3 on TikTok.
All right.
So Nordine, I just sent you a request on IG, so you can actually check.
All right, brother. I will add you now. Okay, thank you. Thank you very much.
All right. Mr. Roberts, your take on the spirituality, your final words, and then your social media handles.
Sure. When I was a lot younger, they always said there are three topics you never talk about: sex, politics, and religion. But I will dabble into the spirituality side. So it's interesting for those of you who follow the Christian religion. In the Bible, there's actually a verse. It's Ezekiel 28:5, which says, "By your great skill in trading, you have increased your wealth." And which links to a lot of the stuff as well, because, we've heard that you need skill as well to do this. So there's actually a reference in the Bible. When the Bible was written, the reference to trading was obviously a lot different. I do think in terms of, if it is something spiritually that you've been benefited for, I think it's quite important that, whatever religion you come from, that you give back. So, the principle of tithing, I think it's quite important in trading as well. So, if you make a lot of money, instead of buying the Lamborghini, why not invest in, with unprivileged schools and education and food? That's for me a lot better. And that would probably, but that doesn't sell courses and mentorship, unfortunately, but that's the right thing to do. And a lot of the successful traders do that. So that's my view on spirituality. But it is out there, and maybe I've actually said too much and forgotten my rule of not saying anything. In terms of getting a hold of me, I'm not big on Instagram. I'm quite small. My playground at the moment is LinkedIn. Nordine, thank you for buying the book. I've also gone to Instagram, and I'm following you. So great. Look, so I'm predominantly on LinkedIn. And then, as I mentioned, on a weekly basis, every Saturday, I produce a trading principle. I've been doing it for the last 5 years, every Saturday. I'd done it once on a Friday, and people were really unhappy. So my slot is Saturday morning. And these principles are basically, in terms of psychology, not alone always applicable to trading. Some people have learned lessons in terms of other things, but yeah, LinkedIn. I've started a bit on Instagram as well, but yeah, LinkedIn is my playground. And for those of you who have bought the book, Nadine, thank you very much. I hope you do enjoy it. Yeah, thank you, and thank you for this opportunity.
All right. Thank you so much for coming. We really appreciate it. And now, since you guys know Forex trading, FCGFX is all about educating traders in its community. We also have a section we call Forex on Sundays, where we analyze the market and also we share signals from experts for the coming week. So if you are here and you are interested, please contact the organizers of this event, and then we can start from there. Thank you very much, guys, for coming. And also the audio and then the video of this session will be available in the next 24 hours on Spotify, Apple Podcasts, YouTube, Bluebird Group's website, and all other platforms. Thank you so much for joining this discussion. Bye-bye.
Bye.
Bye. Thank you.